But when it comes to 30, he announced a big commitment to get to 50% renewables.
Were you surprised by it?
I was surprised that they would make it so explicit. And even the net zero is a big thing for them. And so I think it will happen faster than 2070 because of the falling costs of renewable and hydrogen. India's burning 80 gigawatt of oil, of diesel, to keep the lights on. So there's an immediate opportunity there. And we're very interested in working that country.
And with regards to China, perhaps the fact that we haven't really seen them active, I guess the diplomats are working on this, but we haven't really seen the leadership.
It's going to be technology, it's going to be industry. I think China has committed to a net zero, which is very important. At the G20, China was clearly behind the 1.5 degrees. So I think a lot has been achieved between the G20 and COP. And I think what's really important is to see in the coming years how quick it's in our hands to make part of this happen in 5 years, or it could otherwise happen in 15, 20 years. It's about building the project. The capital is there. We saw how many trillions of dollars are already committed. What's missing is really the projects, and that's where companies like us step in.
Marco Alvera, CEO of SNAM there, speaking with our Maria Tadeo. Let's turn now to the aviation industry. It's a big contributor to global greenhouse gas emissions, and it's under pressure to change that. In October, the International Air Transport Association, a trade body representing airlines, approved a target of achieving net zero emissions by 2050. To achieve that, many airlines in the US and Europe are looking to buy sustainable aviation fuel made from renewable sources like used vegetable oil. Initiatives like these are pushing plane makers to come up with some radical new aircraft that will eventually cater to our growing appetite for travel without hurting the environment. We took a look at how Airbus, the world's #2 aircraft manufacturer, is stepping up to the challenge.
How long until we can fly emission-free? Airbus says it's more confident by the day it can be done by its 2035 target. Airbus's CEO spoke about its ambitions for hydrogen-powered planes at the company's summit in France.
The physics works. Hydrogen technologies are not new. They are used in other sectors. We use them in space on our rockets, and we don't need the laws of physics to change to be able to use hydrogen on our planes. So every day we become more confident, but we think we need to have a plane, we need to have the right fuels, the hydrogen available in the right quantity at the right place at the right time, and we need the regulations to be ready. So we really need the work and the collaboration of many people around the globe to make it happen on time.
But it could be a long wait until green passenger jets go mainstream. Larger aircraft with more than 150 seats are not expected to feature globally until about 2050. That means manufacturers and airlines today are under growing pressure to ramp up short-term innovations to cut their carbon. In the long term, meeting the ambitious plans for so-called green hydrogen means building a giant industry almost from scratch. To make that happen, British airline EasyJet is among those saying governments need to get involved and fast. Aviation's emissions over the last 3 decades leading up to the pandemic grew by about 80% to over 1 gigaton, and that's projected to double by 2050. According to Bloomberg NEF, about half of the airlines with the largest global market share have set net zero targets by that same date, nearly 3 decades away.
Coming up, from blue sky projects to the bottom line. We'll speak with our Bloomberg NEF expert Meredith Annex and dig into their models about how hydrogen fits into the future energy mix. This is Bloomberg Green. From Bloomberg's World Headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. Now let's bring in Meredith Annex, our Bloomberg NEF hydrogen specialist, to talk more about how hydrogen could change the energy landscape. So Meredith, what place do you think hydrogen is likely to have in the future energy mix globally?
Hydrogen's this incredible solution for us as we look to decarbonize because it's a perfect solution in areas that are hard to electrify. So where we like to think about hydrogen playing a role, it's in things like heavy industry, especially where you need a feedstock as well as energy source, and in things like dispatchable power, long-haul transport, maybe even shipping and aviation.
That sounds great that it can be used for such diverse industries. At the end of the day, though, how much is this going to cost?
Well, that's the amazing thing about hydrogen, because depending on how you make it, it can actually see significant cost declines in the future. So when we're talking about clean hydrogen, we usually mean green hydrogen produced from renewable electricity. And in that case, your hydrogen is almost as cheap as the renewables that are used to make it. So if you're in a place with really good renewable resources, you'll be able to have cheaper hydrogen. But even in places with less good resources, we think that hydrogen can be cheaper than $1 per kilogram, which is the price of unabated hydrogen today, and around $8 per million BTUs for those who prefer to think in energy units. And that can be achieved anywhere in the world by 2050, we believe.
All right, so let's talk about kind of the pros and cons list. I don't know where cost fits into that, but what are the advantages to hydrogen over other renewables, and then what are the drawbacks?
Yeah, main advantage is the fact that hydrogen can serve roles that electrons struggle with. And that's things like seasonal storage, for instance, or just anything where you need storability, where electrons are harder to store, hydrogen is going to be easier. That also leads to a downside, though, because hydrogen is less energy dense than the usual things that we use for storable energy today, like coal or oil or natural gas. So you will need more volume of storage to handle the same amount of energy.
Let's talk about the viability as well and how it may differ in different geographies. What is your view on that?
Yeah, so for green hydrogen, again, from renewable electricity, really places with the best renewable resources, things like Latin America or the Middle East, even Southern Europe, have really, really good potential for producing hydrogen. And then when you're looking at blue hydrogen, which is produced from natural gas or coal with carbon capture and storage, we do see that becoming more expensive than green hydrogen in the future, especially as renewable electricity costs come down. But that can be a viable option in places like the US Gulf Coast or Russia, where you've got good geological storage for the carbon, as well as ample natural gas that's quite cheap.
All right, great breakdown. Thank you so much to our Meredith Annex, our Bloomberg NEF hydrogen specialist. And of course, you can get more from the Bloomberg NEF team on the terminal and online. And they've recently done a podcast called Hydrogen 101 as part of its Switched On series. So from iron ore titans pivoting to cleaner energy to talk of a hydrogen revolution, that's it from this week's edition of Bloomberg Green. We'll be back next week with a deep dive into the state of electric vehicles. And you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. I'm Kaylee Lyons from Bloomberg's World Headquarters in New York, and this is Bloomberg Green.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Is this yesterday? All over again. Groundhog Day, perhaps. Right now, right to the numbers, we've got the Dow down 18 points. At one point, the Dow had been down as many as 819. It had been down as much as 2.4%, but right now, little changed on the Dow, down less than 0.1%. S&P lower by 34, bouncing off the bottom, drop now of 0.8%, while NASDAQ is down 202, a drop for the NASDAQ Composite Index of 1.5%. NASDAQ 100 Index also down by 1.5%. Key takeaway, well off session lows. Again, we have got the Dow very close to being unchanged on the day. Stocks paired losses as dip buyers resurface to snap up bargains. Major averages remain lower amid concern over the Fed's inflation-fighting stance and Russia's saber-rattling against Ukraine. Federal Reserve policymakers have begun their two-day meeting with Chair Jay Powell, facing the challenge of addressing soaring inflation without significantly denting economic growth and risk appetite. Kate Moore is head of thematic strategy at BlackRock Financial Management.
Look, our base case expectation is that Powell is going to sound a lot more dovish than some of the extremely hawkish economists who've been upping their forecasts over recent weeks and since the start of the year. But that may not be enough to completely calm the markets. I think we have to start to get to policy normalization before we see some of the vol come down. And we really have a great sense for the trajectory of real rates, which in my view is one of the major drivers of equity risk at this moment.
The Biden administration has concluded that a global semiconductor shortage will persist until at least the second half of this year. Among some of the semiconductor names today, we are seeing Intel lower by 0.9%, AMD down 3.4%, Broadcom up 0.2%. Microsoft reports after the bell, and that's a Bloomberg Business Flash.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, folks, it is Tuesday, January 25th, 2022. Carol Masser along with Tim Stenovic. We are live in our Interactive Broker studio. We're streaming on YouTube. We are FOMC Eve.
We are. Hey, everyone wants to know how the mashed potatoes were last night.
I did not have them.
Okay. Well, I'll tell you what. The Dow, as Charlie mentioned, it's close to getting into the green, just down 0.1% right now.
I did have some bolognese with gnocchi. Does that count?
Yeah, that's fine.
No, it doesn't.
Okay.
Gnocchi are really good. We're going to talk about stocks bouncing around again. I really do feel like all bets are off until we hear from the Fed, but it is fascinating, Tim, to see us bouncing off those worst levels of the day again.
Yeah, we're going to dig into markets in just a few minutes and throughout the show. Also joining us, speaking of the Fed, Carol, a former Treasury official on the Fed's next moves. We're going to get that from Steve Skanke.
Love checking in with him. Chips still down, so says the Biden administration when it comes to global supplies, and so it seems for NVIDIA's plans to hook up with ARM. We'll get into that. We're also going to talk about big tech because we've got Microsoft earnings after the close.
Yeah, we're also going to hear from Texas Instruments, and then later this week we have Apple and Tesla as well. Have you heard of those?
Yeah. Also, Anne-Marie Slaughter is going to be with us. She's got a new book. It's personal. It addresses the nation. It addresses a lot. It's called Renewal, and we'll get to her a little bit later on. First up, though, let's get to the Market Drivers Report. And let's set the Business Week agenda on this FOMC Eve, also known as Tuesday. Gina Martin-Adams with us, Chief Equity Strategist at Bloomberg Intelligence, on the phone in New Jersey. I was listening to her this morning. And Kriti Gupta, Bloomberg Markets Correspondent at Bloomberg News, on the phone in our New York City bureau. Gina, let's kick it off with you. Tim and myself and our TV team, we were talking with you after the close yesterday. What a day, what a wild day. Now that you've had, roughly 24 hours to assess the trade yesterday, what are the chief takeaways?
Yeah, I mean, I think that the chief takeaways are actually being played out in the market today, and that is we've at least confirmed that midday low yesterday was an interim low. When we opened this morning, we went back and tried to test the late afternoon dip that we saw before the big rally into the close and successfully tested that level. I think that gives us a little bit of solace and hope that the Fed can effectively thread this needle tomorrow. Hopefully not out hawk what I think you accurately described as a pretty hawkish market expectation. And if earnings can come through, maybe this is the low. Let's just wait to see. But I'm a little bit more optimistic after seeing yesterday and then today play out.
Let's bring in Kriti Gupta, Bloomberg Markets correspondent. Kriti, I'm wondering about the needle that the Fed has to thread tomorrow.
Is it a crochet needle? Yeah. Is it a wool knitting needle? Or is it, I've done those like really fine threads.
But in all seriousness, and I've said this over and over again, I've beat this drum. I mean, making sure that markets are the Fed's dual mandate does not include markets, right? It includes tackling inflation, it includes stable, and it includes maximizing employment.
Let's be real, Kriti, it does.
Okay, there it is, Carol. What's the needle that the Fed has to thread?
Well, the Fed, think about what we're going into. The bets that you're going to see on the Fed right now, they're extremely hawkish, right? We're looking at a bond market that's considering, not pricing in, but considering as many as 50 basis points in March. So really, they kind of have a little bit of an easy game here where the Fed just has to come out more dovish than the market is expecting. And the market is already pretty hawkish going into this. So that's really what they have to come out and do successfully to see a little bit more of kind of risk appetite. And I wonder, and I'm not going to say if this is going to happen or not, but I wonder if that's the catalyst that investors need to really come back and buy with conviction, because that's been one of the big major unknowns. Yes, you have geopolitical risk. Yes, you have this technical correction, valuations, earnings, blah, blah. But it really comes down to the Fed, right? And that's really that messaging that we need very clearly. So when you ask, what are they kind of trying to thread? Well, they have to talk about two things. One is going to be the balance sheet reduction and how it happens. They also have to talk about whether a 50 basis point hike is even on the table, or if that's just the traders kind of getting ahead of themselves. And it kind of seems like going into that environment, they have a pretty, like I said, a hawkish environment they're starting off with.
Gina, we're obviously focused on the Fed. I get it, because what they do will certainly determine what kind of economic growth we see going forward. Having said that, I am awash in research about how stocks have moved mostly higher during Fed rate increases. What are the fundamentals that we need to be smart about and really focus on in terms of equity investing right now?
Yeah, I think that's a great question, because what we do know this year is that the Fed's going to hike rates. What we do know this year is that the Fed's going to embark upon, shifting their tone on the balance sheet. So we know these things. Those things create vulnerability in the multiple. But the side of the equation that really matters for stocks longer term is what happens with earnings growth. And the Fed has very little control over
like we have to hear,
growth. Right?
The angels rising.
I think that's a really astute point, because we've sort of lost sight of what really matters for stocks in all of this Fed speak. And the reality is that our models say that the macro is strong enough to expect 15% earnings growth this year. If we can get 15% earnings growth, even with 4 Fed hikes and balance sheet tightening, we could end up with a flat to slightly higher year this year.
Right.
Definitely a rocky year is expected, but let's say you get 20 to 25% earnings growth, it's a completely different story. So I think you watch this earnings season really carefully. You especially watch margins. Will we continue to see double-digit revenue growth feed through to double-digit bottom line growth over the course of 2022 is a really critical question.
Hey, really quickly, though, in terms of the market reset, the corrections we've seen, the pullbacks we've seen, if we get 15% earnings growth, if that's maybe the base case, do the valuations, do they make more sense right now as we sit?
Oh, yeah. Yeah, absolutely. And when we think about valuations, we especially want to be really careful to think about relative valuations, because what matters for investors looking to invest a dollar is what is the value of a stock relative to in comparison to other asset classes. Right. And frankly, the equity risk premium, which is stocks yield in comparison to the bond yield available, is still incredibly attractive in comparison to the longer term. So even though those valuations may come under some pressure, they're already extremely elevated, or they're already extremely suppressed, relative to the bond market, and there's plenty of wiggle room there.
Tina, Hank Smith, Haverford, that's exactly what he said. You guys are great. Gina Martin-Adams over at Bloomberg Intelligence, and of course, Kriti Gupta will be back later on with her chart of the day.
Let's do the Bloomberg Business Week bite of the day. It's one number that tells us a lot. Today's number, Carol, $9.2 trillion.
It's a big one. $9.2 trillion investment in low-carbon infrastructure and systems is needed every year to achieve net zero by 2050. This is according to McKinsey. Tim, that's at least $3.5 trillion more a year than is currently laid out. Oil and gas would drop 55% and 70% respectively by 2050. Coal use would be virtually wiped out. That's another recalibration that's going on in our world.
And we're not doing it. We're not spending enough.
All right. You took the air out
I'm
of me.
sorry. Well, let's go to Washington, D.C. for a save from Nancy Lyons, who's standing by with world and national news. Hey there, Nance.
Thanks, Tim. Pfizer says it is starting a study of a COVID-19 vaccine that specifically targets the Omicron variant. The company wants to explore its use in previously vaccinated younger and middle-aged adults, as well as those who have not received another coronavirus shot. A clinical trial is underway and uses the same 2-dose regimen with a booster. The Supreme Court may have tossed out President Biden's vaccine mandate for large businesses, but a lot of them are going ahead with it on their own.
A Gartner survey of business executives finds 35% of them still plan to require employees to be vaccinated. Just 4% say they're dropping their mandate. 29% say they haven't made a decision yet. Almost 40% say a mandate could make it easier to attract employees as they continue dealing with sickouts caused by the Omicron variant. About 1 in 4 execs surveyed think a mandate would actually make hiring harder. In Washington, I'm Nathan Hager, Bloomberg Radio.
London police are looking into parties held at government offices during the COVID-19 lockdown. British Prime Minister Boris Johnson is battling for his political survival over the revelations and says he's fine with the investigation.
I welcome the Met's decision to conduct its own investigation because I believe this will help to give the public the clarity it needs and help to draw a line under matters.
A spokesman for Johnson says the Prime Minister does not believe that he broke the law. Johnson has already apologized to the Queen after it was learned his staff held 2 parties on the eve of Prince Philip's funeral. And he also has come under fire for attending a drinks reception at Downing Street. Global news 24 hours a day on air and on Bloomberg Quick Take. I'm Nancy Lyons.
All right, Nancy Lyons, thank you so much. You are listening to Bloomberg Business Week. Carol Master, Tim Stenovic. A few COVID headlines, as there always are on any given day. Where do you want to start?
Well, it's interesting, Carol. Both of these are stories that are political in nature and stories that kind of epitomize where we are when it comes to the pandemic. Let's start with what's happening in our kind of backyard here in New York. New York is appealing a ruling by a Long Island judge that its mask mandate for schools and other public places is an illegal end run around the state constitution.
The mask-wearing rule was issued December 10th by the state's health commissioner at the urging of Governor Kathy Hochul around the start of the Omicron surge of the pandemic. A group of parents sued to block the mandate, saying their school-age children should not be forced to wear a mask. And then yesterday, Judge Thomas Rademacher ruled that Hochul and the health commissioner overstepped their authority, saying the governor should instead seek the passage of a law.
So here's what the governor said in response, quote, while the intentions of Commissioner Bassett and Governor Hochul appear, this is Rademacher, excuse me. Oh, sorry, yeah. Here I want us to go with what Kathy Hochul said. Quote, my responsibility as governor is to protect New Yorkers throughout this public health crisis, and these measures help prevent the spread of COVID-19 and save lives. Quote, we strongly disagree with this ruling, and we are pursuing every option to reverse this immediately.
So taking politics out of it, you know, I lean on what the doctors are saying that we talked to, what the CDC is saying, and the CDC still recommends universal indoor masks for all children ages 2 and up when they are in school. And so I know you and I, like our default, I'm like, I'll wear a mask forever if that's what I need to do to keep me safe and those around me.
Yeah, no, a lot of parents feel differently about their kids, though.
Yeah.
You know?
Do you see it? How do you see it?
I don't see it because at the school where Arlo goes, it's a requirement.
Okay.
But you can only do so much with kids who are like 5 and under.
Right. It's tricky. Yeah. All I know is if my daughter's older, but if I had younger kids, if that means they could be in school because it's the socialization and all of the experience is so important for kids, I'd be like, yeah, let's do it. Right.
Hey, if it's that or virtual school, it's mass in schools, right?
Yeah, we'll talk more, and we'll talk about another story out of the state of Florida. We'll get to that in just a moment on Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another day of reversals on Wall Street, at least for the Dow Jones Industrial Average. The Dow higher now by 33 points, up 0.1%. S&P well off session lows, still lower, down by 28 points, a drop there of 0.6%. Nasdaq down 183, a drop there of 1.3%. The Nasdaq 100 index down 1.4%, and the Russell 2000 remains lower, down by 1%. Bottom line, though, dip buyers trying to save the day as stocks trim their drop. 10-year yield, 1.77%, 10 years down 2/30 seconds. Gold, spot gold up 0.5%, $18.52 the ounce, and West Texas Intermediate crude up 2.4%, $85.32 for a barrel of WTI. Again, recapping stocks trading mix, the Dow higher up 24, S&P down 26, down 0.6%. Briefly, Elton John postponing his Texas concerts after getting COVID-19, despite being vaccinated and boosted. I'm Charlie Pellet. That big sign is a Bloomberg Business Flash.
It is a big sign. All right, Charlie, thank you so much. Well, we just talked about some of the headlines that are out there. Pfizer and BioNTech starting a study of a COVID-19 vaccine targeting Omicron. To me, that kind of is a little late in my view, but I'm not an expert, Tim.
Yeah, I thought the same thing. I think something similar with the regards to, people starting to get certain types of masks now, and then those home test kits that are being sent to them as well.
Right?
Yeah.
Exactly.
Better late than never, though.
Yeah, no, that's true. That's true. Let's get into it with Dr. Harold Paus. He's Executive Vice President for Health Sciences over at Stony Brook University, former Chancellor for Health Affairs at The Ohio State University, and CEO of Wexner Medical Center. He's also former Chief Medical Officer at Aetna. He comes at this from such a great vantage point. Dr. Paus back with us on the phone from Stony Brook, New York. Dr. Paus, nice to have you here with Tim and myself. How are you?
Doing well, thank you. Good to be with both of you.
Well, it's good to have you here. There are a lot of headlines, as always, that are thrown back at us. We are increasingly seeing it, once again, political when it comes to not having to wear masks. We're seeing different things in New York and elsewhere. What's first and foremost when you want to have a conversation about COVID right now?
Well, I think, first of all, we are seeing cases down 75% statewide in New York since the Omicron peak, and the positivity rate is down to about 12% from over 22% just since January 5th. So that's a positive sign. And as I think everyone has heard, the East Coast, New York in particular, has led that decline, and we remain very hopeful that the rest of the nation will continue to follow in short order. That's really, really important. And we're seeing that on Long Island as well. The numbers are going down.
So with that background and the headline that Carol shared that Pfizer and BioNTech have started this trial of an Omicron-specific vaccine, does it seem like it's too late for that because of the way that we've seen variants from the Alpha to the Delta to the Omicron and all those in between move, or does it kind of make sense? Or does it kind of make sense? Like, help us understand why this is why these companies would want to do that.
So, we're going to continue to see variants, I believe, of the COVID-19 virus, and as such, we know, for example, that 3 shots of the vaccine today, of these mRNA vaccines, are protective in large part, particularly as it has to do with hospitalization and severe illness. When we're in our Stony Brook University Hospital, the patients that we see hospitalized are the ones that are not vaccinated, or if they have had all 3 vaccines, they have severe underlying immunocompromising illnesses, such as a transplant or severe underlying cancer, something of that sort. But for the general population, these vaccines, 3 of them together, have offered significant protection. Now, it doesn't mean that people are being prevented from contracting the virus, having a mild illness. But the important thing is that we're keeping everything we can to keep people out of the hospital And even more importantly than that, keeping them out of the ICU and off the ventilators and preventing their death. That's what we hope for from these vaccines. As variants come forward in the future, and inevitably there will be more variants. These viruses, all these viruses vary. We see that with influenza each year.
Right.
Having new vaccines available to address that's going to be important. And I think clinical studies will tell us how effective this newest vaccine will be in preventing either this variant, the Omicron variant, or something that follows it in the future. You know, we talk about someone getting a third or a fourth booster. I like to think about it this way, and this is how I explain it to family and friends. Every year I go get a flu shot because the flu virus, the influenza virus, has variants. It transforms itself each year. I've lost count as to the number of times I've received a flu shot each fall. But I go get one because I believe it'll help prevent me, maybe not from contracting the flu, but from getting severely sick with the flu and winding up in the hospital. And I think that's where we're headed, in my opinion, with COVID-19. You know, early on, many of us had hoped we could eradicate this. We could stop it in its tracks as a global pandemic. In fact, in all likelihood, as I think about it, it will be something that we will contend with. But the goal is to reduce it to clusters so that it's not a pandemic. And most importantly, we can protect the population from wind up becoming critically ill and from wind up being hospitalized and dying. That should be our focus and our goal. And when these things do come along, we take appropriate measures to protect the community. Social distancing, wearing a mask that's effective so that we can reduce the spread and avoid getting other people sick. Because some people, as I said earlier, because of a severe underlying disease, may not get the full benefit of the vaccine to protect them.
Right, and we still have to think about this, though, in terms of global initiatives and hoping everybody's kind of on the same page about this. Dr. Pauls, thank you so much. Really appreciate it, and the best to you. Dr. Harold Pauls, he's Executive VP for Health Sciences over at Stony Brook University, joining us once again on the phone from Stony Brook, New York. I mean, we know so much more than we did at the start of this, no doubt about it.
We do, and I think to a certain extent, he talks about the cases being down in New York City. Just earlier today, Carol, we learned that Bank of America is bringing its staff back to the offices as COVID cases are decreasing. The question is, who follows, right?
Right, exactly.
Banks are one thing, but does everyone come back? Probably not.
I don't know, but it feels like this cycle went fairly quickly versus some of our past cycles.
Oh, absolutely.
Right?
Yeah.
The pandemic. All right, more to come right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Carol Massar, Tim Stenovec, and just want to mention a headline crossing. Energy Department approving a $13.4 billion loan from the oil reserve to 7 firms. Not sure what that means. Anyway, we'll watch it. We're going to talk a bit more.
I'm thinking about chips.
I'm glad you are. We got a couple of stories, right?
Yeah, Ian King, U.S. Semiconductor and Networking reporter, is going to join us with a Bloomberg exclusive about NVIDIA. The company is said to prepare to abandon that $40 billion ARM deal. We're seeing some shares move in response.
Yeah, I'm going to make sense of that headline. Maybe Charlie Pellet, can you make sense of that headline?
You were talking about chips. I thought you were talking about mashed potatoes again. You got a flashback to yesterday, though. But yes, the energy headline there, all part of a previously announced U.S. oil reserves action. I'm looking at oil stocks, Carol. They are higher across the board right now. ExxonMobil up 2.9%. BP up 4.5%. Chevron up 3.4%. EOG Resources up 4.2%. Pioneer Natural up by 3.2%. Again, the Energy Department approving a 13.4 barrel loan from the oil reserve to 7 firms. Dip buyers, here they come, trying to save the day. Stocks have trimmed their drop right now. The Dow up by 1 point. S&P down 25, drop there of 0.6%. NASDAQ down 165, drop there of 1.2%. Choppy session today. We've got the 10-year yield 1.77%. Spot gold up 0.5%, 18.52 the ounce. West Texas Intermediate crude up 2.7%, 85.58 a barrel. So familiar themes from yesterday. Concern about the Federal Reserve's inflation-fighting stance. Also, Russia's saber-rattling against Ukraine. Pfizer says it's starting a study of a COVID-19 vaccine that targets the Omicron variant, exploring its use in previously vaccinated younger and middle-aged adults, as well as those who have not received another coronavirus shot. Well, certainly one of the challenges for business has been getting employees back to the office. Dr. Amish Adalja, senior scholar at the Johns Hopkins Center for Health Security.
People have different risk tolerances, and our society is kind of not deciding which way they want to go, and that's why organizations have people still working from home, where there's a lot of restrictions in place at organizations, as well as at universities. Universities are probably the worst example of this, where they can't find an off-ramp to dealing with this the way they deal with other respiratory viruses.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking those vaccine stocks, Pfizer up 2%. BioNTech, its German partner, its ADR is up 5.8%. AstraZeneca's ADR is down, up 1.5%. Moderna is down 0.9%. J&J, Johnson & Johnson rallying by 2.9%. Recapping, we've got the Dow now lower, choppy day, down less than 0.1%. S&P down 0.6. NASDAQ down 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Yep, the only certainty is volatility at this point. All right, Charlie, thank you so much, and thanks for the assist on that Energy Department headline as well. Speaking of headlines, earlier today we got one from the Biden administration concluding that a global semiconductor shortage will persist until at least the second half of this year, promising long-term strain on a range of U.S. businesses, including automakers and the consumer electronics industry. And then you had NVIDIA, Tim, said to be quietly preparing to abandon its $40 billion deal to buy ARM from SoftBank, according to those in the know.
Yeah, that story from our own Ian King and others. He is U.S. Semiconductor and Networking reporter here at Bloomberg News. Shares of NVIDIA, by the way, down about 3.2% right now. Ian King joins us now. Ian, how are you? Hey, Ian, I want to make sure you're with us, but I do want to ask all about the story that you wrote along with our colleagues, Giles Turner and Peter Elstrom, about NVIDIA is said to prepare to abandon that $40 billion ARM deal. And as a result, shares of NVIDIA are lower. What can you tell us?
Well, I think, we have to be a little bit careful here. There are lots of puts and takes. There are competing voices, as we said in the story, both inside NVIDIA and in SoftBank. So we're not saying that, they're going to come out tomorrow and say this is over. But according to our reporting, there appears to be an acknowledgement and a preparation for this not to get through this
Connection
very difficult approval process around the world in terms of regulators. And you remember from day one that, everybody was like, yeah, from a business perspective, this deal kind of makes sense, but really, are they really, are regulators going to allow this to happen? So, the story, if there's a bottom line to it, would be to sort of say that, our reporting shows that there's kind of an acknowledgement of that coming within some aspects of these companies.
There's a lot going on in the semiconductor industry and, the Biden administration coming out. Where are we in terms of cycles and companies ramping up? We hear a lot about big spends from Intel and others, Ian. So how do you kind of see some of the longer term story threads that might play out this year?
Yeah, I mean, if you look at the report that came out from the Commerce Department, the background to this is that the administration and politicians in general have been like, look, we need to do something about this. This is terrible for, the automotive industry in general. What's going on? We need to get to the bottom of this. They did this huge survey, this huge look into the supply chain to look for areas that they might be able to intervene in and make things better. Unfortunately, the conclusion that they've sort of come up with is really one that the industry has sort of been telling them all along, which is nothing gets better until at the earliest the second half of this year. And largely, for many industries, we'll have to wait until next year before we get the level of supply that we've needed. So it's a little bit disappointing in general, but for those people who cover the chip industry, not that surprising.
So what does that mean for consumers and for consumers who are trying to understand why prices of autos are higher or why they're having trouble getting their hands on certain goods?
Yeah, I mean, it's back to this sort of conflation of long-term and short-term aspects of the chip industry that we're talking about. I mean, you've got a short-term, demand spike caused by various things. And at the same time, we've got the reality of the inertia of the chip industry, which is that even at the very beginning of this crisis, if everybody had gone out and started digging holes in the ground and building plants, those plants wouldn't be online right now. And in reality, we've got companies like Intel last week saying, hey, we're going to expand into Ohio. And everybody goes, oh, that's fantastic. They're spending $20 billion. But those plants won't come online until, 2025. So short term, there's nobody riding to the rescue here.
Ian, really quickly, 20 seconds, with the NVIDIA and ARM, does something else happen? Does somebody else come in and look at ARM, or can they? Is there any other kind of consolidation or moves that you're watching just closely, real quickly?
I mean, plan B here, as we've said all along, has been that SoftBank tries to get out of this asset and get a return by doing an IPO.
Okay, so we'll watch for that. Thank you. I know it's a busy day, lots going on, including Texas Instruments after the close, but Ian's always there for us. Ian King, U.S. Semiconductor Networking Reporter at Bloomberg News, on the phone from our San Francisco Bureau. Important space.
Important space, also Intel tomorrow.
Oh, that's right.
Yeah.
So he's a little bitty.
He's a little busy. Thanks, Ian, for coming on.
I bet he's got a cot, on the side at that San Francisco Bureau. All right, everybody, let's get back to World and National News. Over to D.C., our 99.1 newsroom in the nation's capital, and Nancy Lyons.
Thanks, Carol. The White House is holding a classified bipartisan briefing today on the latest in Ukraine for House and Senate leadership and committee staff. Lawmakers are expected to get their own briefing next week when they get back to Washington after their recess. White House Press Secretary Jen Psaki says the situation right now is extremely uncertain.
Of course, our preferred path is diplomacy, and we can't predict where the mind of President Putin is. We've certainly seen aggressive actions and preparations increasing at the border.
Psaki says America's NATO partners are unified about the fact there will be severe consequences. You may not realize it, but meat in your grocery store that's labeled product of the USA may have come as far away as Australia.
The loose labeling practices have caught President Biden's attention as he and antitrust regulators set their sights on giant meatpacking conglomerates. Consumer advocates and ranchers consider the labels misleading. Cattle producers say only 4 companies control 85% of U.S. beef processing. The Agriculture Department is reviewing the issue, which gives the president a rare opportunity to make inroads with rural voters while addressing progressive demands to check corporate power. In Washington, I'm Amy Morris, Bloomberg Radio.
The Biden administration says the global semiconductor shortage will likely persist until at least the second half of this year. Commerce Secretary Gina Raimondo says it'll cause long-term strain on a range of businesses, including automakers and the consumer electronics industry. A second New York City police officer has died from wounds he sustained Friday when a gunman opened fire during a domestic disturbance call. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
That is the mashed potato-loving Nancy Lyons. Just going to put that out there. All right, Nancy there with World and National News. I love this story. This is going to be one of my gainers if we get to it in Beyond the Bell a bit later on. American
And we might not
Express.
get to it because of earnings.
Right.
Yeah. It's not for any reason. Like we plan to do the whole show, Carol.
That's
it's
right.
just, after the bell today, we got a slew of earnings we're
To
watching.
all our listeners and watchers on YouTube, we plan to give you so much, and then news happens.
Yeah, exactly.
That's the way it happens. So I love this story, our live blog too, wrapping up American Express, their fourth quarter earnings. But love when the C-suite gets on, and the CEO actually saying corporate travel will never be the same again after COVID-19 forced millions of employees to work from home. He basically, though, said that customers, they're going everywhere except to the office.
Yeah, here's what he said, quote, people are skeptical about business travel because of all the remote workforce. Business travel is going to be completely different. And I think as you have more people in more remote locations, they may need to get together 3, 4, maybe 5 times a year to come to headquarters, end quote. That is American Express's CEO saying that earlier today. Hey, Carol,
This is a big part of their business.
It's a huge part of their business.
Business spend, yeah.
But it also has big implications for the travel sector, right?
Mhm.
Huge implications for airlines. Because
Yes.
the question is, those people who book corporate travel, they're the ones who are sitting at the front of the plane and they're buying tickets later. So they're spending a lot more money, and airlines are relying on them for that travel spend.
Yeah, exactly. And what's interesting is Amex does expect a full recovery in travel and entertainment spending for individual consumers and small businesses by the end of the year. A similar rebound in corporate travel and entertainment spending will take longer, according to the company. And that's where they make a lot of money. I think about all the trips we haven't taken in COVID, and I do see a new perspective, a new think about, do we really need to go there? What do we get out of there?
You're thinking about the work trips.
The work trips.
Okay.
Not
you're
about the personal
thinking.
trips.
Yeah, you're not thinking.
You
because
put me on a beach, personally, I get a lot out of it.
I was just going to say that.
Put the little flag up on the umbrella, get a
Where's the
little
best kept secret?
I'm not telling anybody.
Okay.
I don't want them to go.
Okay, well, it's a small island.
Our island, my
Okay.
island. You can go there. I'll let you know about it.
All right, check out Bloomberg.
Stop. Don't share. This is Bloomberg.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Dip buyers trying to save the day. Look at the Dow up by 139 points right now. Best level of the session, up by 0.4%. If I sound excited, it's because I am at the worst level of the day. The Dow had been down 819 points, down 2.4%. But again, right now we do have the Dow Jones Industrial Average up 121 points, up by about 0.4%. S&P paring its loss now. It had been down 123, down 2.8%. Right now, a 10-point drop in the S&P, lower by 0.2%. Nasdaq down 110, drop there of 0.8%. Dip buyers resurfacing to snap up stock bargains after a morning sell-off that was driven by concern over the Fed's inflation-fighting stance and Russia's saber-rattling against Ukraine. Again, that 10-year 1.78% right now. Spot gold up 0.5%, $18.53 the ounce, and West Texas Intermediate crude oil up 2.6%, $85.47 for a barrel of WTI. Lots of big earnings after the closing bell today. Among those reports, Microsoft shares lower now by 0.7%. Texas Instruments down 0.3%. Capital One Financial up now by 3.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, throughout the pandemic, now in its third year, we all, I think it's safe to say, have a story about access to testing, Tim, right? We all have one of trying to get the test, buy the test, keep on top of it. That's the focus of the forthcoming remarks in the new issue of Bloomberg Business Week magazine.
Those remarks written by Emma Court and Cynthia Coons. Joining us now is Cynthia Coons, U.S. healthcare reporter for Bloomberg News. She joins us on the phone from New Jersey. Also with us is Joel Weber, editor at Bloomberg Business Week. He joins us on the Access line from Brooklyn. Joel, this is a question I've been asking myself over the last, probably 8 weeks specifically, as the Omicron variant has surged and subsequently fallen here in New York City. Why is the United States still far behind when it comes to testing? Like, it really feels like we're playing catch up.
Yeah, well, it's a question that we're going to let Cynthia answer, but I'll stretch it a little bit longer. Because you're right, like Omicron obviously made it another question that we just couldn't stop asking. And, you know, Carol, there at the top, like here we are knocking on the door of 2 years of this. And really, America is almost like we were in the first 6 months, where we really haven't made as much progress on the testing front as you would have expected. And yet we have vaccines in record time. And so the question that we sort of went to Cynthia with was like, look, like Operation Warp Speed, that worked. We got results. We got, you know, vaccines, but like, you know, we still are kind of where we started with testing. What would like an Operation Warp Speed for testing look like? And that there is sort of a nuanced answer, but you know, there is maybe some hope there, right, Cynthia?
Yeah, it's interesting. I feel like the one thing testing needs is not warp speed, but really this, what we've heard from everyone involved in it is really a long-term commitment and investment, something that the U.S. government hasn't necessarily done. And I think when you think about Omicron, there are very specific characteristics to what happened in this exact wave. First of all, we certainly were not investing at a federal level in a huge way in rapid at-home testing, but also rapid at-home testing has really fallen outside of, it hasn't really been, say, like insurance. It hasn't been their responsibility in the past. They don't pay for that typically. So there wasn't an obvious mechanism for us to get a lot of free rapid at-home tests onto the market. But the U.S. government wasn't in the background necessarily building up that industry the way they did support the drug makers in making the vaccines. And so what happened with Omicron was this combination of both we didn't have the investment in the downtime, but also we had labs that were just short-staffed because the people were sick with Omicron. So then a lot of people were seeking tests through these labs, and therefore there was just a crunch in the lab space, and people were running to get these at-home kits, and they weren't around. Not to make any excuse for it, it's just to explain that there were a couple different dynamics at play, and it was a stress test, and the system clearly failed. So what the government is trying to do now is they're putting programs in place, but what they're really trying to game out, and what
test makers really want to see is a long-term strategic plan, because nobody wants to build a factory and let it sit for 3 years, 5 years, 8 years, waiting for the next thing to come along. That's just not sustainable. They really need the government to help make that possible. Otherwise, we're just not going to have tests when either the next wave of COVID hits or the next.
Yeah, well, Cynthia, that's what I wonder about, because there's also an expiration date on these that I've noticed, at least with the take-home test. So it's like I have some tests sitting in.
Tim's been stocking up. Don't let him kid you. He tells me when they're on sale. Get them here.
Well, look, you're bringing up two really important points, Carol. One is that I think that it's not that this kind of sneaks up from nowhere, but there's like a colossal shift in demand, right? It goes from sort of like you see these tests available at the pharmacy to then, a week stock. That was my own anecdotal experience. But they expire too, Cynthia. So what is the line that these companies and the government have to kind of cross in order to create enough, but not too many, and also just not have to throw them away in a couple of years if they indeed expire, which would actually be a great scenario because we don't need them.
Right.
Well, I think ultimately it is going to come down to a question of how comfortable we are with buying too many, because ultimately I don't think we can decide, there's some sweet spot. We really don't know. I mean, Omicron and what potential future variants could do in terms of just the exponential spread. I mean, it's really eye-opening. And so I think the idea that we're going to run the risk of making too many and throw them away, probably going to be what has to happen for right now, because I think people really want to have some comfort. But then there's also the other reality within the diagnostic space, and we didn't quite get into it in this piece, but we sort of started to hear more about, like, what could these platforms be used for, and like what could these businesses do longer term, so that hopefully COVID does go away soon, and then they're looking at having platforms that are available for other types of tests that they could do instead, because we can't expect hundreds of millions of COVID tests to be churned out indefinitely. But I think for the near term, probably we might have to just err on the side of oversupplying the market for a short term. But then longer term, like, how do you keep these businesses sustainable, and how does, say, our federal regulators make it possible for these companies to be able to pivot with the type of technology they're using, so that they can have, say, testing platforms and they're able to plug different types of tests into them and then sell them that way.
Another thing that I thought was really interesting that your reporting illuminated, Cynthia, is this thing about not only is there sort of a dearth of tests here, but there's even a dearth of testing manufacturers if you compare it to the EU. Why is that? Why does the U.S. have so many fewer manufacturers?
It's interesting. So the U.S. FDA is known in some sense to be quite conservative, and that's one thing. It's a reputational thing. However, there's not necessarily. It's kind of interesting in that it's not clear to us whether or not maybe the FDA is slower than the EU regulators, or their standards are more stringent. But I think what ultimately is happening now is the FDA is also recognizing that that's not going to work. So what they're doing actually is prioritizing test makers who can come out of the gate and make a lot, which is an interesting strategy. It disadvantages startups and young companies trying to get into this space who may not have the infrastructure, but it certainly points to they're starting to triangulate. It's not just about the science and the test. It's of course about that. They definitely don't want this to get anyone to get anything wrong. But I think they're also sort of weighing that in context of like what companies can do. So maybe we don't end up with the EU has tons of different test makers. We may end up with fewer, but fewer that could do a higher amount of production, at least in near term in the beginning. But certainly the EU has moved faster and gotten a bigger variety of tests onto the market. And I really couldn't say for sure exactly what that's down to, although I do know that the FDA has really picked up the pace. And if you look at the approvals since October, it's picked up a lot. So I think it's definitely speeding along here now.
Well, it's so relevant to where we are today and the importance. Everybody who comes on, certainly from the medical community, talks to us about testing. It's really important, and to have that access. Hey, guys, thanks so much. Cynthia Coons, U.S. healthcare reporter, Bloomberg News, part of the team that put together the remarks in the upcoming issue of Bloomberg Business Week magazine. You can catch it on the Bloomberg at Bloomberg.com, and also newsstands later on this week. And our thanks to Joel Weber. Hear more from him later up in the week. He's editor of Business Week. You are listening to Bloomberg Business Week on Bloomberg Radio.
to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romain Bostic, Taylor Riggs joined now by our colleagues Carol Masser and Tim Stenovic as we go across platform TV, radio, YouTube to talk about a sense of deja vu, Carol. We go flat on the S&P, we're higher on the Dow.
How crazy is this? And I am wondering about what we get from the Fed meeting, what we get from Microsoft earnings this evening, whether or not this provides catalyst for another move to the upside potentially, and we just forget about the sell-off that we saw Monday, yesterday.
Potatoes.
I haven't yet.
Hey, you know, moves like this are extraordinarily rare, and a shout out to Matt Turner over on the live blog, because he points out that since 1983, the S&P 500 has never closed in the green on back-to-back days after seeing intraday losses of 2% or more. Well, guess what? It just hit the green. Now it's lower by just about 0.6, or close to 0.1%, I should say. But if it closes in the green, extraordinarily rare.
Wild. 31% higher on volumes. We're currently seeing the S&P 500. 4,407 is where we trade. As we say, just 3 points lower. The Dow in the green by 0.6%. The Nasdaq off by 0.6%, but it was off by more than 3% earlier. And the Russell 2000 managing to claw back its losses, lower by just 3 points, less than 0.2%.
And I know when we talk about breadth, Romain always comes in and corrects me, so I don't want to get ahead of myself here, but at least from a sector level, things are looking a little bit better than at least yesterday at this time, maybe a little bit before when it was all red on the screen. You're getting energy and financials. Again, this is the theme for the year. This is the theme for the day, continuing to outperform. Energy is now higher by 4% on the day. Financials, 1%. That could be a yield story as well. Real estate and healthcare brings in some of that defensiveness, Romain, but you do note that it is technology, again, at the bottom in the red.
Yeah, and I mean, just to provide a little bit of levity, it's definitely a defensive nature to some of this. We should point out volume is elevated, but certainly well below what we saw yesterday. We're headed into a Fed decision tomorrow, as well as quite a few earnings that could certainly provide a catalyst either up or down. Microsoft reporting after the bell tonight, those shares down about 0.7%. It'll be interesting to see what they say about their cloud business. Remember, we heard from IBM yesterday after the bell about their cloud business. It did appear that not only was it strong at IBM, but a lot of that appeared to be part of a broader strength that we're seeing in the IT space. Those shares, IBM, up about 6.5% here on the day. General Electric was out reporting earnings a little bit earlier. Those shares down about 5% as they ran into some stumbles. We should point out all their divisions, with the exception of GE Aviation, had a drop in growth, and the aviation business only had a 4% jump in growth. That was well below what the street was looking for. So keep an eye on some of these companies here and the comparisons that they're going to have to deal with, Carol, as we look towards this quarter and beyond.
I've got a great chart really showing how much we've eroded in terms of the valuations, the frothiness we saw in the market. It was great. We were talking with Anurag Rana a little bit earlier as we look towards Microsoft and him sort of talking about how much the valuations have already contracted. The NASDAQ, we haven't seen the NASDAQ 100 valuation drop to the May 2020 levels now in the recent sell-off. So we were, I mean, $2.2 trillion route now that we've seen. We were originally, at 30 times forward earnings? We're now at 25 times forward earnings. Remember, though, in past sell-offs, has to get down to 16 or 18 before you start to see the real buying.
But that's a really good point. We were talking about that with Gina Martin-Adams at the top of our broadcast about this recalibration because markets have corrected so much that some of those valuations of some of those names certainly look a lot more attractive. We are recalibrating, and that's true when it comes to global growth rates. And we heard from Gita Gopinath over at the IMF. They have brought down their growth estimates for the U.S. and China. Here's what she had to say, though, specifically about the United States.
We no longer have the Build Back Better fiscal package in our baseline, and we are also expecting monetary tightening in the U.S., so that's in the baseline, that's been baked into it, and there are supply disruptions. So these factors are behind the downgrade for the U.S.
All right, and that, of course, is Gita Gopinath of the IMF. My question is the IMF usually good in terms of their forecast for growth, guys?
I'll answer that. I used to cover the IMF for years, and I used to follow these forecasts pretty closely. I don't think it's so much a matter of whether they're good or bad. They tend to be a little bit of a lagger, if you will, here. Usually the data is sound, and the economists over there, I can tell you, are pretty much top-notch. But it's not necessarily the lead indicator that I think most people would look to.
They followed the World Bank, of course, which already downgraded the growth forecast. But what are we hearing from CEOs, from executives, from companies? I mean, Amex CEO speaking to us earlier, really positive on the consumer, on where the economy goes, thinks this Fed's been pretty smart thus far.
Yeah, but the one spot that wasn't really a bright spot was people actually spending for business purposes, right, Caroline? And that's the concern, because business spending is not only important for a company like American Express, but it's incredibly important for the economy. I mean, if we just think about it from the airline's perspective, right, they need business travel to resume because business travelers buy those seats later, they spend more money, and they sit at the front of the plane.
But they were upbeat enough to up their forecast, right, their revenue forecast for 2022, which is so important, right, Taylor, in terms of the outlooks of what we're hearing from these CEOs.
And you talk about the outlook for some of the consumers as well. We got some of that consumer confidence numbers this morning, dipping just a little bit slightly, but it was noticeable. And Romain, we were chuckling about this a little bit earlier. Those one-year ahead inflation expectations coming down just a little bit, finally now just 6.8%.
Yeah, and can I just pour a little cold water too on the Amex stuff? I mean, they obviously appeal to a certain demographic in this country, and we have to remember there are a lot of folks that fall below that demographic with regards to their spending power. So you wonder how much of the strength that we're seeing in Amex is truly a read across the entire economy.
Certainly, when we're looking, though, at the travel and entertainment space, when it comes to businesses, he's saying, look, everyone's out and about traveling. They're just not going to the office thus far. But he's liking a flexible workforce, and he thinks we'll see more domestic travel. That's certainly kind of what we've been seeing from an everyday consumer. But you're right, this is still a tale of the haves and the have-nots.
Yeah, and we should point out to our audience, we're going to get Capital One earnings after the bell here, a credit card company that maybe has a little bit broader base. So it'll be interesting to see whether their results match up with American Express. And I'm keeping an eye on a lot of things here, Carol. Did you know that processed potato futures down for a third straight day here based on euro pricing here?
See, don't you love the markets?
I just thought you'd be interested.
There's an index for everything.
There's everything on the Bloomberg.
No mashed potatoes. But what's interesting when it comes to earnings, like Johnson & Johnson, right? They were upbeat too. This is the thing that we need to hear from is these CEOs, what they're saying, if they're comfortable giving forecasts. That sends to me some confidence about the outlook. Maybe growth won't be as strong. Maybe corporate earnings won't be as strong. But Gina Martin-Adams talking about 15% corporate earnings, growth. Not so bad.
What do you think of Microsoft tonight? I mean, do you think that's going to be a bit of a bellwether for tech?
It's a big part of market indexes, right? Almost, 10% of the NASDAQ and the NASDAQ 100. I mean, this could maybe impact investors.
Why is it not a haven?
It's a top-rated company, right, in the S&P.
Yeah, exactly.
So this is a big week. We get this. We get Apple top-weighted as well. Tesla, right?
Yeah. It's a lot of earnings. All right, guys, we will be back at 4 o'clock Wall Street time. We're going to do our cross-platform coverage. We call it Beyond the Bell on radio, TV, and YouTube. We're going to count you down to the close on this Tuesday.
This is Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I'm a little tired.
It's only Tuesday, Lemon.
It's only Tuesday, Lemon. No, good to hear. I think in terms of the growth rates, too, that we hear from whether it's the IMF or others, like watch these trend lines. And I think it's just a reminder that, again, things maybe will not be growing like we saw, certainly as the economy reopened, right? The comparisons were a lot easier. It's going to be a little bit different this year.
It's interesting that, when we heard that clip from Geeta Gopinath at the IMF, and she mentioned Build Back Better. She mentioned monetary policy as well.
Right.
She also mentioned supply disruptions.
Right.
And that is what I want to hear from all of these companies this week. I want to hear from Tesla about how the supply chain is. I want to hear from Microsoft. How are they doing in getting chips? I want to hear from Apple about components. I mean, there are so many components that just go into the iPhone, and they're from around the world.
It does seem like...
How have they dealt with Omicron?
We heard it from Tesla, though, before. They seem to maneuver around the semiconductor shortages, and I think we're all like, well, how are you doing it?
Apple
and
did
others
a pretty good job, too.
Right, exactly. I mean, there's some new Apple products that have come into our home, and we didn't have a problem. Just going to say.
What'd you get?
Some new earbuds, new laptop for the kid for college.
We got AirTags. AirTags. They're little tags that kind of keep track of your
stuff.
Like
tiles?
Yeah, they're exactly, I know, poor tile. Yeah, they're exactly like tiles.
Jeez.
I know.
It's like, what they say, it's a bad day when 60 Minutes, you knocks on your door on a Monday morning. It's a bad day when,
Apple
you find out
into what you're doing. Yeah. No, you're right. That's a good point.
Or Amazon jumps into your market.
Yeah.
Anyway, we will have big earnings. Microsoft, Texas Instruments after the closing bell, Capital One as well. So we'll get some more good reads. I think Gina mentioned this is going to be a very busy week for earnings and some big names, and that'll give us a better feel of kind of how things look.
But the Fed, too.
Yeah, there is that tomorrow. We'll have that Fed decision. All right, let's get back to world and national news. Over to D.C. we go and to Nancy Lyons. She's in our newsroom there. Hey, Nance.
Learn about a possible Russian invasion in Ukraine. President Biden says Russian President Vladimir Putin has amassed 100,000 troops along the border, and if he advances those troops, The U.S. and its allies will take action.
Not only in terms of economic consequences and political consequences, but it'll be enormous consequences worldwide. This would be the largest, if he were to move in with all those forces, it'd be the largest invasion since World War II.
Biden says any U.S. troops sent to the region would be part of the NATO mission. The International Monetary Fund says the world economy will grow at a slower pace than it first estimated, so it's cutting its forecast a half percentage point to 4.4%. Bloomberg's Irv Chapman with more.
The forecast reflects lowered expectations for the world's two largest economies, the United States and China. IMF economist Geeta Gopinath explained in a Bloomberg interview.
The reason for the U.S. is we no longer have the Build Back Better package in our baseline. There are supply disruptions. In China, we have the faster than expected slowdown in the real estate sector and also the weakness in recovery in private consumption.
Gopinath said European economies are also growing, but slowly, held back by the continued contraction of tourism, among other things. In Washington, Irv Chapman, Bloomberg Radio.
Put down your pencils. The SAT is going digital. The College Board that administers the standardized test says beginning in 2024, students will take the test on a laptop, and it's going to be trimmed down from 3 hours down to 2. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. You know, by the time it gets to your son, and he takes, if they're even still doing the standardized testing, he'll be just like, he'll say the answers in his head, and it'll be like, what is it that Elon Musk
They
is
won't
developing?
need standardized testing for robot training school.
It'll be a chip in it.
Okay, where he goes and programs the robots for doing the jobs.
Go be a plumber. He'll make a lot of money.
You know what, though?
What?
It's not that far away.
What is it?
Like the idea of a career for my 3-year-old.
No.
You know, and think about what was happening, you know, so 15 years from now, he'll be 18, okay? So what was happening in the United States 15 years ago, right? It was already, you know, the mid 2000s. I think Facebook had already been invented. It wasn't that long ago.
Like, when did the iPhone first come out? Like, I always
2007 was when the
iPhone.
iPhone.
That long ago.
Yeah, 2007 was when the iPhone first came out.
Right.
Yeah. So anyway.
There'll be the flying taxis.
Yeah. No, there won't be.
There just might be.
eVTOLs.
Open your mind.
Do you think?
Yeah, maybe.
Okay, maybe.
In the meantime, I bet there'll still be bonuses. How's that
Nice.
for a segue?
I like it.
Deutsche Bank weighing an increase to its bonus pool of about 15% as the German lender navigates the twin challenges of competing for talent while keeping costs under control. These guys, man, I mean, it's a fight for talent right now.
Yeah, it is. Pretty good time to be one of those people who they're fighting over. The overall expansion in payouts masks strong divergence in variable compensation across the bank. That's according to people familiar with the matter. Well, above average increases, they are earmarked for parts of the investment bank. Staff in some back office units may see substantial drops, these people said, asking not to be identified, discussing the private information.
Well, the CEO saying he wants to pay top performers, quote unquote, competitively amid demand for investment banking talent. Recently described in a Bloomberg interview with one of Deutsche Bank's officials as, quote, the highest I've ever seen. That competition has led Wall Street rivals, including Goldman, JP Morgan, to ratchet up bonuses and incur some of the highest expenses in years. We saw that on the balance sheet as they were reporting earnings, right?
Yeah.
The costs, the compensation costs, they were pretty big numbers.
Do we hear about compensation costs from companies like Apple, Microsoft, Tesla?
That's a great question, and it should be asked. Well done, Tim Stanovic. Yeah, well done. All right, you're listening to Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Another choppy day, another day in which dip buyers come rushing in late in the day. Let's head right over to the First Word breaking news desk for today's afternoon call. Lots going on. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. An aggressive bounce off the lows for a second day here. The Dow is currently up 114 points, was down 819. The S&Ps are still down 16, while the NASDAQ is still down 143. The U.S. 10-year yield at 1.78%. Gold is up 7. Oil is also climbing. And Bitcoin is little changed. Among the main 11 S&P sectors, energy, financials, real estate, and healthcare were in the green. Telecom was under pressure. And leaders to the upside in the Dow, American Express, Home Depot, and Chevron, while Walgreens and Salesforce led to the downside. After earnings, GE fell as much as 9%. And in deal news, Wells Fargo is considering a sale of its billion-dollar stake in a Hong Kong lender. And in other news, GM to invest over $7 billion in 4 Michigan manufacturing sites. Wrapping things up, Microsoft reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg, type squawk, SQUAWK, on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Bloomberg Business Week is brought to you by SEI. Today's competitive marketplace requires asset managers to become more operationally adept. See how you can transform your business with SEI's global platform at SEIC.com/IMS.
All right, less than 24 hours from now, we will have had the first FOMC meeting of the year, a meeting that has investors on edge again about how aggressive the Fed will be in reducing the liquidity in the system. We've got a great voice on this. So glad he's joining us once again. We're talking about Steve Skanke.
Steve Skanke is a former U.S. Treasury and White House National Security Staff member, also Chief Economic Advisor at Keel Point. Okay, Steve, always great to have you with us, and we're grateful that you join us before these big meetings. What is going through a Fed official's head right now, given the volatility that we've seen, not just in the last 2 days, but really since the start of 2022?
Yeah, well, first, thanks for having me back. It's always my pleasure to be with you, Carol and Tim. Any Fed official who's got to be voting on the FOMC today and tomorrow has got to be thinking about their reaction when the minutes of the December meeting came out, and markets, which had thought they understood what the Fed was going to do and sort of took it very well, all of a sudden figured out that they were probably being more hawkish and thinking more hawkishly than the market had expected. And that's when this recent spate of volatility and market sell-off started, with markets, the S&P showing down 10% year to date at one point yesterday before it bounced back. And then, of course, markets were off again today, and we've had another bounce back. So the big question is, how does the Fed convey what it is they want to do to combat inflation without creating a chaotic market environment? So messaging is a very important part of what they're thinking about and how they describe it. And what, if anything, do they want to say about letting their balance sheet run down later in the year, which was part of the discussion at the December meeting, which really didn't come out until the minutes were released earlier this month.
I feel like, Steve, it's kind of one of those things, those discussions you have with your kids or something, like, we'll see, like, we'll wait and see. We're data dependent. We'll wait and see. Versus, all right, we're going to do X, Y, and Z. Like, we know the Fed is going to start raising rates. We know liquidity is going to be taken out of the system. Done deal, right? The hawkish comments, they did the dirty work in the December meeting. Do we get the specifics, do you think, about March? Probably a quarter of a point. Will we get that specificity from Jay Powell and company tomorrow?
We certainly would expect to get that specificity. Either he's going to say we're going to do it in March, or we're going to wait and see. It's really hard to imagine how they can wait and see with the December unemployment and inflation numbers. Headline inflation, CPI up 7% for December, PPI up 9.7% for December. Obviously lower at the core rate, 5.5 for the CPI, 6.9 for the PPI. But you know what's really interesting, and this I think confounds the Fed's deliberations a little bit. When you drill down into it, product prices were up 7% on a core basis in December, but services were only up 2.7%. It really goes to the supply chain disruption,
right?
And how retailers and even manufacturers are dealing with the COVID-related disruptions of getting their supply chain going again.
Hey, Steve,
think about it. Go ahead.
Yeah, well, I was just going to say, because, I know the Fed's dual mandate. It's about stable prices and maximum employment. It doesn't include anything about propping up markets. And whenever I say that, Carol gives me this look because they're obviously looking at financial markets. Help just take us into the decision-making process here of a voting Fed official and help us understand, how they look at market volatility and how they understand their decisions will be interpreted by the markets and how they make decisions based on that.
Well, certainly they care about public reaction and market reaction. Obviously, their mandate is to do the things that you said, price stability and full employment in the economy. And they ought to do that irrespective of the near and longer term impact that has on financial markets. But they care very much when the disruption to financial markets is about messaging or as a result of how it was communicated. And what we saw on January 4, when the minutes came out, is it was all about communication. Yes, there was a comment that they were talking about but hadn't decided anything on letting their balance sheet run off, which was also part of the Chairman Powell communication issue in December 2018 when he said something about liquidity. And, and that means that we'll be reducing liquidity as our balance sheet runs off. Well, that just caused markets to explode. And so interesting that we have the same issue triggering market volatility and a downdraft as a result of how the Fed communicated this.
Well, you
want to do the...
Yeah,
go ahead.
No, well, you like so many others, I'm looking at the research points that you sent with us. The good news, historically, equity markets continue to perform well after the Fed rate hikes begin, with the bull market running maybe another 3 to 5 years. That's some of the research you shared with us. We're hearing that because we cannot lose sight that there will be economic growth, fingers crossed, that there will be corporate earnings, just maybe not as dynamic as we've seen. Gotta run. Steve, thank you so much. A voice we turn to when it comes to all things Fed outlook. Steve Skanke, former U.S. Treasury and White House National Security Council staff member. He is, of course, Chief Economic Advisor at Keel Point. You're listening to Bloomberg Business Week. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, this is Bloomberg Business Week. We've got just under a half an hour to go until that closing bell. Yeah.
Look at that.
Got some big earnings coming. Coming up, though, we've got Kriti Gupta with her chart of the day.
Yeah, all about emerging market equities and those versus developed markets, at least when it comes to in the context of rate hikes. We're going to get that in just a minute.
Yeah, really smart to watch, right?
Yeah. In the meantime, let's get a check of that trading day. Here's Charlie Pellet.
An update, we told you the Dow was higher, no longer the case. 28 minutes ago before that closing bell clangs on Wall Street. 67-point drop right now in the Dow Jones Industrial Average, down 0.2%. Dip buyers did come in. Now they disappear. We've got the S&P down 40, drop of 0.9%. Just about 32 minutes ago, S&P was flat on the day after being down as many as 123 points. So right now, a loss of 43 on the S&P. That represents a decline of 1%. NASDAQ tumbling another 244 points, down 1.8%. NASDAQ 100 index down 2%. 10 years down 2/32. 10-year yield 1.77%. Spot gold up 0.3%, $18.48 the ounce, and West Texas Intermediate crude oil up 2.3%, $85.20 for a barrel of WTI. Pfizer says it is starting a study of a COVID-19 vaccine that targets the Omicron variant, exploring its use in previously vaccinated younger and middle-aged adults, as well as those who have not received another coronavirus shot. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security.
It's true that the vaccine is able to protect against what matters, serious disease, hospitalization, and death. But if people are worried about infections and trying to get cases down, then I think a better targeted vaccine makes sense. However, it's only going to come after the brunt of Omicron passes over the United States and passes over the world, so it may be less effective. But it could be the case that this type of updating would be useful if new variants emerge out of the Omicron lineage or are related to Omicron, and it gives more protection.
Dr. Adalja with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking those vaccine stocks, for the most part higher across the board. Pfizer up 1.8%. Its German partner BioNTech, its ADRs up 4.7%. AstraZeneca's ADRs up 1.3%. Moderna tumbling now by 1.65%, extending its January loss to 39%. Johnson & Johnson shares are up now by 2.7%. Stocks are trading lower right now, a sell-off being driven by concerns over the Fed's inflation-fighting stance and Russia's saber-rattling against Ukraine. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each and every day at this time, just under a half hour before the markets close here in New York City, we turn to Bloomberg Markets correspondent Kriti Gupta, who joins us with her chart of the day. Kriti, we're talking about emerging market equities versus developed markets in the context of rate hikes. Give us the details.
Yeah, well, I was looking at where all the money went, right? We're looking at the stock market, we're looking at the treasury market, we're seeing all of these funds kind of come out, and I found that it's actually a lot of it is going into emerging markets at a time where you don't actually see emerging markets should traditionally get that bid, because when you do have tighter monetary policy on the horizon, investors don't traditionally or historically choose riskier assets like emerging markets, except this time they kind of are. And this is interesting because it comes in the backdrop of 10 years in which emerging markets have actually underperformed, have lagged developed markets like the U.S., the U.K., Europe, and of course China as well. So I kind of looked into this, why is this happening? And a bunch of the market consensus is simply because a lot of these emerging markets hiked rates way before the Fed was even thinking about it. They kind of front run that, and that's not a normal thing to do. Usually the Fed tightens first, they make the first move, the rest of the world follows, and this is really where you hear, well, the Fed is behind the curve, and the consequences of that is that in market sell-offs like the one right now, where a lot of it is driven by monetary policy, people are going to emerging markets instead and saying, well, a lot of the monetary policy moves there, well, they already happened. They're in the rearview mirror, so perhaps this is a bet that might actually pay off.
How important, though, are growth estimates, and comparisons in terms of where the growth is in the economies around the world, developed versus developing, and the corporate earnings that follow as a result?
Yeah, well, for developed markets, it's going to be a really key piece of the equation. But right now, from a broader perspective, and this is kind of the danger in trading kind of assets instead of looking at the fundamentals, because right now, if we actually look at the way the flows are going, they're not actively picking stocks in emerging markets, looking at the growth fundamentals, looking at the earnings. They're usually doing it through ETFs, which have seen some really elevated volume lately as people exit the United States. So they're doing this as kind of these broad bets on emerging markets broadly instead of, hey, let's go check out Mercado Libre, for example, or let's go check out Alibaba, for example. So I think to your point is that when you're talking about growth fundamentals, when it comes to emerging market flows, at least in this context, it's not really a factor.
Okay, I want a little bit of a how the sausage is made anecdote here. Creedy, obviously we're here on the eve of the Fed, of hearing from Fed Chair Jay Powell. Meeting is kicked off. Why choose emerging markets as being the lens for rate hikes?
Yeah, well, when you look at a tightening cycle, and I think this is pretty traditional of anyone who's out there making charts right now or conducting research, you're going to try to find the anomalies, right? That's what makes a market. Any kind of correlations that are breaking down, anything that stands out. And there's a pretty normal playbook, historically speaking, when you have a rate hike on the horizon, or in this case in March, you tend to see the dollar really increase, you tend to see yields increase, you tend to see the stock market throw a little bit of a tantrum. We are seeing all of those things, the treasury market excluded because there's some weird wonkiness going on there. You don't see emerging markets do that. So for me, that was the anomaly when looking at what the normal kind of trend is for a rate hike, what tends to happen. So to see, especially at a time where the entire world, by the way, is selling off, the developed world, to see EM equities actually do really well, that really stuck out to me. The green in a sea of red, if you will.
Yeah, no, I can understand why it kind of pops out at you. Hey, in terms of something that you're keeping an eye on, it is the ongoing tensions that we're seeing over in Europe, specifically the role of Russia and with the Ukraine and what happens, because Russia is so crucial to the energy markets. What do we need to know, or what caught your attention?
Yeah, well, one of the big concerns of why this Russia conflict is so big is because about 40 to 50% of European natural gas, what they use to heat their homes, is dependent on Russia in particular. So what happens if Russia is no longer able to, first off, supply it, or if sanctions are put onto it? And one of the big things the Biden administration was doing was trying to find other places to do that. Qatar was the main one, a main LNG exporter. And now the story that caught my eye was simply a scoop by our very own Jennifer Jacobs and company saying that, well, that's not even an option anymore. So Europe kind of stuck between a rock and a hard place when it comes to those natural gas flows.
Simone Foxman and Ben Bartenstein also on that story. Hey, good stuff, smart stuff, and some great insight when it comes to the markets. Our Kriti Gupta, Bloomberg Markets correspondent at Bloomberg News, on the phone right here in New York City.
Let's go check the latest world and national news. For that, we turn to Nancy Lyons in D.C. Hey, Nance.
Invasion of Ukraine would change the world. That's according to President Biden, who told reporters it would be the largest invasion since World War II. He says Russian President Vladimir Putin has been told about the 8,500 U.S. troops that may be heading to the region.
Those forces in high alert they're part of a NATO operation, not a sole U.S. operation, and I've made it clear to President Putin that we have a sacred obligation, Article 5 obligation to our NATO allies.
Biden says he has spoken to all those allies and says they're all on the same page regarding action if Russia invades Ukraine. So much for number 2 pencils and filling in bubbles. As Bloomberg's Nathan Hager reports, the SAT is going digital.
The College Board says it's getting rid of the paper SAT internationally next year and in the U.S. by 2024. The goal is to make the test easier to take, to give, and to make it more relevant as more colleges make it optional for admission. Students are also going to have less time to take the test. Instead of 3 hours, it'll only be 2, and they will be able to use their own laptops, but they'll still have to show up at a monitored testing site, so no SATs at home. In Washington, I'm Nathan Hager, Bloomberg Radio.
A second New York City police officer has died from his injuries following a domestic disturbance that claimed the life of his partner on Friday. Officer Wilbert Mora died today. He and Officer Jason Rivera were ambushed and gunned down after responding to the domestic disturbance call in Harlem. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. Nancy Lyons in D.C. So this story is the second most read on the Bloomberg terminal, I think, in the past 8 hours.
Well, it's the most read in the last 1 hour.
Is it?
Yeah, at least according to my data.
Oh, okay.
Yeah.
All right, well, it's the second most on mine.
But that's 8 hours.
Whatever.
Okay.
It's people are reading it. Sorry.
I hope we're talking about the same story here,
We are.
Carol.
We're talking about Paul Allen.
Okay,
right?
we are. Okay, so this is a story by Ben Stupples. The family office of the co-founder of Microsoft, Paul Allen, has spun out its investment management group into a standalone business that caters to the world's super rich.
Yeah, this is interesting. We love to watch what family offices are doing. Vulcan Capital, now Circano Management, and oversees investment assets for the estate and family foundation of Allen, who you might remember died back in 2018. This is all according to a representative of the family office, Vulcan, led by former Vulcan Capital Chief Investment Officer Chris Orndorff, and allocates across public markets, private equity, and real estate, according to a November registry filing.
Orndorff didn't immediately respond to a request for comment. The Bellevue, Washington-based company describes itself as an investment advisory firm to ultra-high net worth individuals. It has managed assets that total about $7.7 billion. That was at the end of September.
You know, I love kind of hearing what family offices are doing.
Yeah, we got to love 13 Fs, right?
Right, exactly. Get an idea of where these individuals are putting their assets. And increasingly, you see that eventually kind of spreads out to the broader retail audience, right? We've heard about private equity wanting to be able to access more retail investors. But it is interesting to kind of get an idea. And I guess it's common for an investment management group to operate inside a family office. It did, however, according to our reporting, make sense to separate that function for legal and tax reasons after Allen's death. This was coming from the Vulcan representative putting this out to Ben in an email statement.
Okay, so a little Microsoft history here. Bill Gates started Microsoft with Paul Allen back in 1975. Though Allen left in 1983, he was able to turn his stake into a $26 billion fortune over the next 3 decades. That's according to the Bloomberg Billionaires Index.
Bought a lot of stuff, including a 414-foot super yacht, which got sold, I believe, last year.
Wow.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Been a wild day on Wall Street. The Dow gyrating here between gains and losses as we head toward the close here. 12-point gain right now in the Dow. Fast-moving markets up less than 0.1%. S&P heading for a lower close, down 35 now. Drop of 0.8%. We'll call that a recovery because at one point we had the S&P down 123 points, down 2.8% right now, looking at a loss in the S&P of 0.7%. NASDAQ lower all session long, down 213 points, drop there of 1.6%. Russell 2000 down now by 0.8%. NASDAQ 100 index down 1.8%. 10-year down 3/30 seconds. 10-year yield 1.78%. Spot gold up 0.3, 18.47 the ounce. Bitcoin up 0.5, 36,996 on Bitcoin, and crude up 0.3%, 18.47 the ounce. Briefly, Bank of America is rewarding almost all of its employees with a pool of $1 billion in restricted stock, further boosting compensation as financial firms compete to attract and retain workers. About 97% of Bank of America's global workforce is eligible. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Money market mutual funds have a key vulnerability. In times of trouble, investors have a major incentive to get out first. To reduce the risk of runs, U.S. regulators have proposed a new reform, swing pricing, a mechanism already widely used in Europe. Instead of allowing first movers to get out with no price impact, it would demand funds adjust share prices to reflect transaction costs and, during periods of heavy withdrawals, the effect of selling less liquid assets. This would make investors think twice about pulling out. And if they still did, it would make them bear losses they would otherwise impose on remaining shareholders. U.S. money market funds don't love the idea, but the European experience suggests swing pricing works. And if it led some investors to switch to bank deposits, that would merely reflect true risks being recognized. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and Go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive. It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 10.5 minutes left in today's trading session. Bouncing around, definitely off our lows of the session. We've seen major equity averages move into the green, not holding there, though, with just a few minutes left in today's trading. You heard Charlie breaking down 47 on the S&P, 52 lower on the Dow. NASDAQ, your underperformer, down almost 2%, a decline, Tim, of 272 points. Our next guest we talked to over the holidays.
Oh, it's such a fun one.
But the cost of the 12 days of Christmas.
Yeah, you got to wonder if the Fed is thinking about the cost of the 12 days of Christmas.
On the other 353 days?
Yeah, exactly. Wait. Oh, wow. Good at math, Carol.
Thank you. Yeah.
I'm very impressed.
That's
okay.
what happens.
I was about to correct.
Econ major.
Wow, okay. Well, we're talking about Amanda Gotti, the Chief Investment Officer at PNC Asset Management Group. She joins us once again on the phone from Philadelphia. Amanda, how are you?
I'm doing great. How are you?
We're doing well. Yeah, just really trying to make sense of what is going on in the markets. We did see the S&P 500 ever so briefly reach the green a little earlier in the day, but it's now down more than 1.1%. The NASDAQ down, as Carol said, more than 2% right now. How do you explain what's going on here?
Well, how do we make sense of the insanity? Key objective here. I mean, we believe strongly that the market is just really struggling to reprice a rapidly evolving macro backdrop. And it's really catalyzed by a complete 180 in terms of tone and behavior and potentially policy shifting coming out of the Fed. Their messaging in December was notably different and a lot less patient. That is, they're very focused on withdrawal of policy support and at a much more rapid pace than I think what market participants were expecting. And so the market is really struggling with what exactly does that mean? What does that look like? And so hopefully we will get some more clarity and clues out of the Fed meeting tomorrow. But I think at the end of the day, in the absence of a lot of clarity, the market is just really struggling in this higher volatility regime to figure out what that path forward looks like. A rising rate backdrop and a sustained inflationary backdrop, both really significant headwinds for market multiples.
All right. Having said that, market multiples have come down from where they were, considering the corrections that we've seen on a lot of those major equity averages. When you look, and you do look, at a lot of, Amanda, a lot of the technicals within the market, whether it's the S&P 500, whether you're looking at market breadth or the Russell 2000, we've been watching small caps in a big way too. What do they tell you? Have we bottomed out? Has capitulation happened, or not quite sure yet?
Well, the technical backdrop is definitely suggesting that we're reaching fairly extreme levels. When you look at moving averages, when you look at breadth, when you look at relative strength, they're all really pushing it in terms of extreme levels. That being said, it's hard to argue that we've necessarily reached a bottom here, although I think, the finish yesterday was particularly interesting given how far down the market fell over the course of the day and then managed to eke out some very small gains. You have to think that sort of 10% down technical correction, if not textbook level correction from the all-time highs, certainly was a trigger there in terms of a little bit of stabilization. But until we get better clarity around what the path forward for Fed policy is going to look like, I think the market's going to chop around.
All right, I know, Tim, you want to ask a question, but I'm just going to say, we know what Fed policy, we don't know the specifics, but we know the Fed is going to start raising rates. We know it's not going to be such an easy monetary policy. We kind of got the dirty deed done in December from the Fed, did we not?
Well, we got some of it.
Okay.
I think it was very unexpected, certainly. But the pace of change, I think, is a lot more than what the market was suggesting. And so, in a backdrop where growth is starting to slow, that is, we're passing the peak in terms of a number of economic indicators that we track, as well as earnings growth, that slower growth dynamic here is not necessarily the ballast that we need when the Fed is going to immediately pull the ripcord and withdraw policy support. So a number of rate hikes potentially here waiting in the wings early in 2022 here. And then the key question, too, is how fast do they actually start to taper the balance sheet? Those are two fairly significant headwinds for market multiples. And, it's hard to argue that even with the pullback we've seen in the market, that really any aspect of the market is table pounding cheap. We're at really extended levels in terms of valuations. And so in that dynamic where there's multiple headwinds from a macro and from a policy perspective, doesn't leave a lot of shock absorber or headroom for the market to adjust. And so in the absence of, more specific clarity or even slowing in terms of that policy shift, I think the market's just going to struggle here and be choppy here for a bit longer.
I do, Amanda, want to go from macro to micro because it's not just the Fed that we have meeting this week. We also get earnings from some of the biggest companies out there, including Apple, Tesla. Microsoft is happening in just a few minutes. We're going to bring that to you live on Bloomberg TV and on Bloomberg Radio. What are you looking to hear, Amanda, from these companies to help get an understanding of how they're taking into account perhaps a rising rate environment, but also supply chain challenges and what that could spell for the greater market? I mean, Carol made the point earlier in the day. Microsoft's a really big part of the NASDAQ 100, the NASDAQ, and the S&P 500.
Yeah, we could really use some beats and raises out of some of these big bellwether names for the index. You want some stabilization. Those heavyweights will certainly do that if they beat and raise. I think the single most important catalyst for the markets in 2022 is not necessarily the Fed policy clarity. It's actually supply chain normalization because that impacts so many aspects of not only earnings growth, but GDP growth, and certainly the inflationary backdrop. And so we really are going to be watching very closely for guidance in terms of how much more pain is left there. Are we starting to work through the challenges? Are we starting to get some stabilization or not? Because I think that really is going to be the key to the path forward. If we can get supply chain normalization, we actually think the inflationary fire will start to fade a bit from the backdrop. and perhaps make the Fed's job a little bit easier than where they find ourselves today.
Right. I do think about that in terms of that dual mandate. We know we've got kind of, for the most part, check in the labor market, although there's certainly pockets, minorities and others, that are still struggling in terms of improvement. But if inflation comes down, that would make it a lot easier for the Fed to not be maybe so aggressive. Amanda, so great to talk with you again. Amanda Gotti, she's Chief Investment Officer at PNC Asset Management Group, on the phone from Philadelphia. We've got just a few minutes left in the trading day. We're bouncing around here, folks. We are in the red across the board, more than 1% down on the S&P and the NASDAQ. Still your underperformer, down about 2.2%. Do not forget Microsoft earnings, Texas Instrument earnings, and also Capital One also coming out with their results. All right, time for Beyond the Bell, our cross-platform coverage on TV, radio, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell. Here to help take us beyond the bell. It's our global simulcast. Carol Masser, Tim Stenovic, bringing together our Bloomberg television, radio, and YouTube audiences to parse the moments of the day. Another wild day here, Carol. Yeah. We were deep in the red. We actually poked into the green. Looks like we're going to somehow finish the day somewhere in between all that.
Yeah, and I'm looking for, the outperformers at this point. The KBW Bank Index is one of them. It's up about 0.6%. Cap One, which will report earnings after the closing bell. That's been one of the big reasons why that index is up. That alone, that name ahead of earnings, Tim, up 3%.
A big underperformer today, chip stocks. The Philadelphia Stock Exchange Semiconductor Index down 3.5% right now. All 30 members of the SOX are in the red.
Texas Instruments, we await that after the bell as well. So all eyes on chips, all eyes on really what was going to be a Herculean effort. If we saw the S&P 500 close in the green after back-to-back days of intraday losses of more than 2%, we would have never seen that since the 1980s. But it looks as though we're not going to manage to smash that.
Yeah, and we should point out, too, you mentioned Microsoft. Microsoft actually right now, the biggest drag right now on the S&P. Amazon and Apple, second and third biggest. The biggest gainers, though, on a points basis, Johnson & Johnson and Chevron.
Repricing some of those long-duration assets as yields are rising once again back up to 103 on the 2-year. We migrate higher to a 218 as well on the 20-year.
Yeah, and look, obviously tomorrow yields are really going to be in focus based on what we hear out of Jay Powell. The question is, how does that feed into the equity market? Has basically the worst been priced in? That's the big question, and it'll be interesting to see what kind of commentary Jay Powell has on that particular issue, if any at all. Here are your closing numbers here. We're going to talk about the Dow Jones Industrial Average, which at one point on the day was actually in the green. This looks like it's going to finish in the red, down roughly 0.2% or so. We'll call it about 70 points. We're going to wait a little bit for these numbers to settle, but we're basically down. The S&P 500 is going to close down by 1.2%, down about 54 points, now down 9% more than its all-time high. The NASDAQ Composite down 2.3% or 315 points, and the Russell 2000 looks like it's going to finish the day down by about 1.5%. Carol.
Yeah, and I think volume was interesting today. Certainly not what we saw in terms of yesterday's trade. So there wasn't necessarily the conviction, Caroline, in terms of investors coming back to the market.
Yeah, meanwhile, of course, we do get some breaking news. President Biden, we're going to be meeting with some CEOs, including GM, Ford, Wednesday. This is all about his Build Back Better, the economic agenda, which seems to be, of course, slightly dead on arrival thus far. He's going to be meeting with Microsoft executives, Salesforce, plenty of people gathering to sort of talk about maybe some of the positives that could be seen from a focus on fiscal spending, at least. But tomorrow it's all about monetary policy.
It is. Monetary policy, fiscal policy as well, all coming into light as we take a look at the markets just as we push forward to that big monetary policy meeting tomorrow.
Yeah, and, I'm just going to jump in. Microsoft earnings crossing the wire right now. Their fiscal second quarter revenue, it looks like it beat $51.7 billion. The estimate was for $50.9 billion. Fiscal second quarter EPS coming in right now at $2.48. That's a beat over the consensus estimates of $2.03 here. Just real quickly here, their intelligent cloud business, which of course has been a big growth business for them, basically coming in line with estimates at about $18.33 billion in revenue. Personal computing slightly higher than estimates at about $17.5 billion. The street was looking for about 16.7, guys. And Caroline, and productivity business coming, we'll call it in line, $15.94 billion versus a street estimate consensus of $15.9 billion.
This is all important as the valuation of Microsoft has been seriously beaten up over the past few weeks, the beginning of the year, the fact that we're falling in market after hours, down by 4%, having seen it as one of the biggest points losers on the S&P today, the fact that we're actually managing to beat in terms of a revenue perspective, Romain, it just shows that the valuation bubble is yet to be popped for some of these big tech companies.
Yeah, and it's really about, I think, decelerating growth. I mean, when you talk about the percentage growth that we saw in Microsoft, particularly during the pandemic, you're talking about 30, 40% growth here on that top line revenue number. That's moderating down below 20% now. And I guess the question is, was the stock priced for that already? I guess based on the reaction we're seeing right now, maybe not.
Well, Caroline, you mentioned that Anurag Raga, of course, over at BI, talked a lot about the big tech spend that is still very healthy for a lot of these corporations. The growth that has been the Microsoft Cloud, that Azure product, just reading through the press release, of course, talking about that strong bookings growth and that Microsoft Cloud revenue now to $22.1 billion. You're up 32% year over year, so you're really seeing some of that growth, though it is lower, Carol, from where it had been when you were looking at 40, 45 numbers.
Yeah, so we've got Microsoft down about 5%, more than 5% in the after hours, but rallying to the upside more than 4 or 5% here is Texas Instruments, and it's got to be what the company is saying about the first quarter outlook. First quarter revenue, they're looking for $4.5 billion to $4.9 billion. That, folks, is above estimates of $4.41 billion. This is what we want to hear. What does the company see about the outlook? We'll dig a little bit more deeper into that one. We want to talk a little bit more, though, about Microsoft.
Yeah, let's go back to Microsoft and bring in Anurag Rana, Senior Software and IT Services Analyst for us at Bloomberg Intelligence. And Anurag, when you look at these numbers, based on what Microsoft reported and based on the consensus estimates, they look to be a beat pretty much across the board, yet we're seeing a negative reaction in the shares. What jumped out at you?
So if you would have put a gun to my head and said, how aggressive could I be? I would have said, a lot of these numbers are pretty impressive in the current environment. And I think, the stock reaction is just telling me that that people are not expecting, going forward, a same kind of growth rates for some of these companies, because in the last 12 months, they have seen very, very good bounce back from a weaker the prior year. And I think comparisons are going to get tough for not just Microsoft, but almost all large technology companies.
Well, why is that specifically? I mean, we are seeing tech spend right now. We are seeing companies spend money on upgrading their services. But why are these comps going to be such a challenge?
So if you look at it, overall software spending anywhere is about 10 to 12% at any given time. Microsoft, being almost more than 1/3 of the software market, is growing almost 2 times that. That is very impressive. But to be honest, you can't keep up with that just because the overall industry is not growing as much. So it's more a math problem, not as much an issue with Microsoft's market position or anything else.
Specifically, the cloud business, we know it as the margins, the profitability that you talk about that are so important. How are you thinking about competition and growth within the cloud business?
So the Azure grows at 46%, which is 3 points above what Street was looking for. So which is very impressive because we would have thought that because of Omicron, there would have been some lower transactions in the leisure industry or the transportation industry or the hospitality industry, but we haven't seen that. And I think that shows a lot that people are pushing a lot more workloads to the cloud. Digital transformations are very strong right now, and we saw that with numbers from IBM, Accenture, Tata Consultancy. Like all these companies reported really strong results. I mean, from our side, this is not bad news, frankly.
All right, but certainly investors reading it that way. Shares of Microsoft down about 5.4% in the after hours. You are listening to Bloomberg Radio, watching Bloomberg TV. We're talking to Anurag Rana, Senior Analyst of Software and IT Services at Bloomberg Intelligence. So, Anurag, Activision, how much will the company be asked about that on the call?
I think quite a bit, because if you look at the Activision stock price below 80, or at least that's what I saw last time, I mean, the market's telling me that there is some confusion, or they're not clear whether the deal is going to go through or not. I think there should be a lot of questions on the call about, what are they doing to convince regulators that, that it's an all right deal for them, and how can they pacify some of the opponents that they are not going to, take the video game market and corner it. I think this is going to be the biggest question on the call, along with the normal questions such as profitability and cloud.
Anurag, of course, Romain posed a question, theoretical in its nature, about what would happen, who's going to be the biggest mover of the market this week, whether it's going to be Apple, whether it's going to be Microsoft. But from a supply chain perspective, are you going to hear or listen out for anything coming from Microsoft, or is that more of a question for Apple?
I think it's a little bit of both, but it has a less of an impact on Microsoft's total earnings than it does for Apple. And frankly, from Apple's side, we're getting a bit of mixed signals. There was a news story about Honhai's, chairman talking about a really strong first quarter, but at the same time, the virus cases in China have gone up, and sometimes that has an impact on the factories that does the supply chain. And as we have always said for Apple, it's not a demand story from our side, but it's a matter of can they fulfill the orders for the iPhones.
Anurag, it's always so great to get your expertise. When we see a stock falling 5% with this sort of market cap, it's important. Senior software and IT service analyst for Bloomberg Intelligence. More earnings coming thick and fast. This time, Capital One, of course, we want to look at the strength of the consumer in terms of the strength of business borrowing at the moment. And Capital One coming out with its fourth quarter earnings per share, $5.41. So this is a story of actually a slowdown versus the fiscal fourth quarter of the previous time for its earnings per share, but it does seem to be meeting in terms of its revenue. The revenue coming in strong for Capital One. Of course, they're seeing net revenue $8.1 billion, up 10% year over year. The loans held for investments also climbing. This is a credit card that they're seeing the charge-offs are at 1.4%, but they're managing to see an increase in loans in terms of consumer credit cards, up some. Well, they say average loans increased 6% if you're looking at the fourth quarter of 2021. So clearly, this is a business continuing to see an increase in demand, but the shares falling some 3.8%. How much was baked into today's rally, Romain?
That's the third biggest decliner here in the post-market. Microsoft is the second biggest decliner in the post-market. We should point out F5, which also reported earnings. That's the biggest decliner. You're looking at NASDAQ futures right now, which are down 3% right now. S&P futures down about 1.6% here, Carol. These are pretty heavily weighted companies, at least with Microsoft, a second biggest weighting in the S&P 500. So if these losses hold into the cash session tomorrow, we could see a pretty significant weight here on the indices.
No, really important in terms of the impact it's going to have on the NASDAQ 100, the S&P 500. Amazon's also down about 1% in the after hours. We're going to be looking at all of these big tech names that are reporting to get some indication of maybe what is ahead in terms of the economy and the market environment, Tim.
Yeah, that's a really good point. I mean, I was thinking about last week and what we heard from Netflix and the way that sort of set the tone for trading late in the week. And I'm wondering to what extent these companies that we're hearing from now are setting the tone and how investors are reacting perhaps about, okay, what's Apple going to say? What's Tesla going to say? What else are we going to learn from companies about the current quarter in the year?
And I know that the market isn't the economy, but I've read at least 2 research notes today that shows that even though the Powell put is lower, it is still there, and they can't completely ignore a market. I think if you're down 10% in 3 weeks, fine, but if you're down more than that in 4 weeks, then maybe you start to get a little nervous about when and what is that Powell put, what does that look like, though we are mindful, of course, the market isn't the economy.
And do you remember, we kept on saying analysts hadn't changed. They hadn't moved in the same way that the CEOs had. Their expectations, we're beating in Microsoft, we're beating in Capital One, and yet we are seeing significant falls after hours.
There's going to be a lot of reverberations through the software space. F5 cutting its forecast. You have other names like Asana, Datadog. Look for those second-tier software companies and see how they hold up tomorrow. Again, this is about decelerating growth, not just necessarily just the beat that Microsoft had.
Recalibration. 5.5% higher, though, on Texas Instruments, 4% lower on Microsoft, and Capital One looks like it's little changed here in the after hours, but we'll be watching it certainly into the Wednesday trade. All right, that's going to do it for our cross-platform coverage, our market wrap, Beyond the Bell on radio, TV, and YouTube. Folks, we'll see you again, same time, same place on Fed Wednesday tomorrow.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you're listening to Bloomberg Business Week. Carol Masser, Tim Stenovic. Of course, it's going to be now our focus to the Fed meeting, but right now we've got Microsoft down about 3.9% in the after hours. You've got Texas Instruments up about 5.9%, and Capital One, we did see some movement on that one as well in the after hours following their earnings. That stock right now about unchanged.
Yeah, what's the tone that it sets? Intel reporting tomorrow after the bell. It was a little changed as of last check, despite the fact that Texas Instruments stock is rallying in the after hours.
Yeah, right. We're going to talk about that. Amazon's also down about 1% following Microsoft. Not apples to apples, but
that
nonetheless.
was a little delayed because I checked that right when those numbers came out. and Amazon wasn't moving.
No, but it did.
Yeah,
It's been bouncing around a little bit. All right, we're going to watch the markets, talk a little bit more about chips and tech in just a moment. Right now, though, let's get to your top business stories. Some of that news after the close. Here is once again Charlie Pellet.
Thank you very much. You guys certainly all over it. Microsoft shares moving lower after ours. Microsoft right now down 3.9%. Microsoft did report revenue for the second quarter that beat the average analyst estimate, but shares lower now by just about 4% after ours. Also reporting after the bell, TI, Texas Instruments. It's forecasting revenue for the first quarter. That guidance did beat the average analyst estimate. After ours, shares of Texas Instruments, they are rallying now by just about 3%. The Dow, the S&P, NASDAQ turned out to be a losing day, wild session. NASDAQ down today by 315 points. A lot of selling in the final few minutes, lower by 2.3%. Worst level, NASDAQ have been down 440. The Dow, which at one point was down more than 800 points, ended with a loss of 66, did trade higher late in the day. The Dow had a loss of 0.2%. S&P down 53, a drop there of 1.2%. The afternoon rebound did prove to be short-lived. Major averages fell again as investors remained on edge over the Fed's inflation-fighting stance and Russia's saber-rattling against Ukraine. 10-year yield 1.77%. Spot gold up 0.3, $18.47 the ounce. West Texas Intermediate crude up 2.3%, $85.20 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Got it, Charlie. Thank you so much. So, a lot going on. We're going to stay on technology right now, following those earnings from Microsoft. Stock down 3.4% in the after hours. TI also reporting that stock's up 5.8%. And then we've got, Tim, some other big tech reporting this week. Apple Thursday, Tesla, I think it's tomorrow.
Yeah, and certainly the list goes on because we are just getting started. Let's bring in Crawford Del Pret, president at IDC, International Data Corporation. He joins us once again on the phone from Needham, Massachusetts. Crawford, you've had a bit of time to dive into the Microsoft results. Shareholders not reacting positively despite some beats from the company. What are your first impressions?
Impressions are that the company executed really well in the quarter. They delivered on what we thought they would do for the cloud. They delivered on a top line revenue number of 20% growth, and unlike what we've seen in some of the hardware segments, these guys saw really steady demand and quite frankly strong demand for some of their core products around things like Windows OEM revenue being up 25%. Office products being up 19%, and Office consumer being up 15%. So overall, on the top line, a very strong performance. And then, of course, as you guys know, it was an earnings beat of 248 versus what the street was looking for, which is around 231, I think. So relatively strong performance, but I think that the market obviously has got a different take in terms of what the comments will be going forward.
Yeah, it's not just the top line. You were right. 248 was what Microsoft reported for the quarter. Estimates were for 232, according to Bloomberg. Revenue, the top line, Crawford, 51.73 billion. Estimates were for 50.87 billion. So let's dig into those results a little more and talk about cloud in particular, because that's certainly something that investors are watching closely, and indeed that's perhaps why we're seeing Amazon fall more than 1% in the after hours. Yeah, so look, what's interesting about the cloud is you got to think about, people forget, they think about the cloud as this ethereal thing where applications kind of live. But the way we look at it at IDC is it's more looking at it as a deployment engine. So actually a computer in the cloud. So what is the infrastructure? What is the platform as a service? So the actual guts of the computer to provide an environment that people program on. And if you look at the competitors in those areas, Microsoft has continued to gain in terms of what we call the infrastructure and platform as a service category. If you go back to 2019, Microsoft had about 20.6% of that sort of total platform category, whereas Amazon had about 41. Today, as of 2020, Microsoft's at about closing in on 22%, whereas Amazon has come down a percent and will likely start to continue to level off going forward. So what these results show is that they are continuing to deliver and being able to deliver in the cloud in a super, super competitive environment and provide a solution for a category that is
that we've seen deployments pivot faster to in COVID. And I think Microsoft's timing was really strong here, and I think I think they will continue to have tailwinds in this segment as they've attracted developers to their platform.
I mean, you do wonder, is it just an expectation reset in terms of the run-up? Is it just about that? Because you just really kind of laid out, Crawford, a very bullish case for Microsoft.
Yeah. And we haven't even talked about kind of their next chapter, which is what was announced last week, Carol.
So talk to us about Activision. How does that fit in? Is this a good thing in your view, certainly longer term for Microsoft?
Yeah, we think we think this deal is going to happen, and we think that what Microsoft has thought about is content, and they've taken a very, very broad view to content, and they've taken a massive bite in the content segment by going after Activision. Now, what Microsoft has, right, is they have the machine to serve that content up in an interactive way on their platform and engage people in ways that few other companies do, and bring in other assets before we even get to things like the metaverse or other kinds of augmented and virtual reality. They just have this huge ecosystem within Xbox and also within their collaborative apps that they can start to bring in other kinds of features going forward to the gaming platform. So I think that they've thought very broadly about content, and in my mind, the evolution of Microsoft here is this is the company, rewind a decade, that bought Nokia because they thought they had to control the mobile phone OS.
That was like a Hail Mary from Steve Ballmer, right?
Exactly. Now what they realize is this company doesn't need to necessarily own the operating system. They can take their application assets, right? And that's what they just did with Activision. And they can control those they can bring collaborative apps, combine it with content, and create a whole new kind of gaming experience. And I think that is the key to them being successful with Activision and the other gaming deals that they've done.
Okay, but from a content perspective, can they create that gaming environment exclusively on Xbox? Can they cut off Sony and PlayStation from some of those titles, or from a regulatory perspective, that's not something that they can do or even weigh?
So, Tim, it's a great question, and I think they could, but they won't. I don't think they'll do that. I think what you'll see windowing. So you'll see, the games maybe a little bit earlier on Xbox. But I think it's in their best interest to have a thriving gaming ecosystem. But this is just like Apple and apps, right? Where are the apps richer? On iOS or on Android? All the apps are on both platforms. But you know what? There's usually more features on the iOS apps. Yeah. I think that's the kind of
they usually go first to iOS.
All right.
Yeah, exactly.
So should we talk about other tech? Are you done with Microsoft?
Yeah. Oh, yeah, I'm done with Microsoft. Carol's like, okay, hello. We got to talk to Crawford about other stuff.
I love it. I love the tech universe, and I think investors are kind of like, wait. I'm almost thinking, come on, folks. They did well. Stock's still down about 3.5% in the after hours.
It's about expectations. Right? It's about those crazy interest rates. It's about what's going to happen going forward.
Except
will customers continue to buy?
Let's go there, because technology's been beaten up about concerns about higher rates, and yet there's been a lot of analysis I've been kind of focusing on and obsessed with, Crawford, that when the Fed starts to raise rates, it doesn't mean the tech sector nor the equity markets fall apart. It's a sign that the economy is going to be okay on its own. It doesn't need all the help from the Federal Reserve in terms of liquidity and easing measures. So what do you make of the tech wreck that we've had so far in 2022?
Yeah, so I think that it's just about the choppiness and the uncertainty of inflation, right? So if there's just easy money and there's a lot of money out there, customers can spend, customers can upgrade their tech, and that's going to be, obviously a strong sign for tech companies. And everyone is looking for the first whiff of a pullback. And, frankly, the stuff you're going to hear about in the next few days is all going to be review mirror, right? I think it was a strong Q4. I think you're going to, you're going to continue to see that there was a lot of supply chain shortages. And in the historical results, you're not going to get a lot of answers. Where you're going to get the answers is in the forward-looking comments. And that's what everyone's going to be hanging on. What does it look like? Is our supply chain starting to free up? Are customers running into the cave, or are they coming out of the cave? And is there a sustained buying activity? And
so you're talking about CapEx in terms of technology, is that correct?
Yeah, yeah, absolutely, and I think that for a lot of the core infrastructure companies, so you talk, you look at those core infrastructure suppliers, of which Microsoft is one. I think you're going to see a rotation back into the office around the world, and that means, we probably have to upgrade our networks. We probably have to upgrade our server infrastructure. We probably have to upgrade our storage capacity, and also the software that goes with that. I think in the final analysis, while we're going to see some bumps in the road, you're probably going to see that our expectation for tech to be pretty resilient and spending to continue to be fairly strong will continue overall. Where we're expecting tech, sure, it will pull back, but still be over 5%.
Yeah, I don't see Tim going back to rotary phone anytime or pen and paper.
Yeah,
I'm just saying,
it's because you've seen my handwriting.
No, but our world is increasingly technology,
It is.
And every company we talk to, every CEO, doesn't matter what you do. There's a huge tech component.
There absolutely is, but the question is, what was pulled forward during COVID, and what wasn't pulled forward, and I'm wondering that, Crawford, because you and I have spoken a few times over the last year plus, Crawford, and there was so much tech spending pulled forward because of people moving remotely, workers moving remotely, workers being off-site, and upgrades to systems.
100%.
How are you taking that into account in IDC?
Yeah, so look, in what planet did any of us expect PCs to grow 19.5% last year in terms of total units? Now, here's the give back. We think that if you look at what happened at CES, just take an example like PCs. You saw more AI applied to cameras. You saw richer screens. You saw screens that are less fatiguing on your eyes. You saw multiple screen laptops where there was a screen down by your hands. That's to make the work at home and the hybrid work experience better. So what do we see going forward? We see a market that will not grow at 19% again, but we don't think we give it back. So I think the narrative that we pulled all this demand forward and now markets like that are going to collapse, no, that's not what's going to happen. We're going to buy technology to have a safety net so we can have that flexibility to work from home. So we see PCs pretty much dead flat this year, but not giving back that 19% growth they got last year. And I think that, back to what I said before, that rotation back to the office probably actually means some tailwind into infrastructure spending to catch up on what we didn't spend in the last few years.
All right, you got a minute left or so, I think, or maybe a little bit longer. What other tech names like Apple, Tesla, what do we got? We've got Google and Facebook next week. What are you watching out for?
Yeah, so obviously Intel is one that is going to be super important tomorrow, and I think it's really about component availability, and it's really about how did that overall client computing group do, which we expect it'll be. It should be fairly robust. Our data suggested that in the fourth quarter, PCs were about 1% growth on a huge quarter the year before. And then for Intel, it's really going to be about how did that all-important data center group do? And that's going to come back to this cloud growth that we just saw at Microsoft. And, of course, their forward-looking comments. I would expect data center group will show fairly strong growth. They should show double-digit growth over what they did a year ago. And I think that'll probably be a healthy sign for the cloud, because what we've seen is COVID has accelerated cloud deployments.
All right, I feel like we just had a master class in technology. Crawford, thank you so much. That was
great to talk.
So great to talk to you. Crawford Del Pratt, president at IDC, on the phone from Needham, Massachusetts. One down, a big one. Couple big ones, actually. TI and Microsoft. Lots more to come.
Yeah, Intel, Apple, Google. The list goes on.
Yeah, exactly. Looking forward to it. We'll be breaking it down for you right here on Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. And coming up, a voice that we've had on our air before, Anne-Marie Slaughter, well known when it comes to political science and public policy. She's got a new book out called Renewal, and we're going to have a conversation with her.
Yeah, we're looking forward to talking to her. In the meantime, let's get a check of what is going on, especially in the after hours with those earnings. Here for an update is Charlie Pellett.
Hi, thank you very much, Tim. Here's what's going on. Let's begin with Microsoft, the big story after hours. It posted second quarter sales and profit gains, but it did report decelerating revenue for its Azure cloud computing services, raising concern among some investors that the pace of growth in that division has peaked. Here's Bloomberg Intelligence senior software analyst Anurag Rana, who's interviewed on Bloomberg Television and Radio.
Overall software spending anywhere is about 10 to 12% at any given time. Microsoft, being almost more than 1/3 of the software market, is growing almost 2 times that. That is very impressive. But to be honest, you can't keep up with that just because the overall industry is not growing as much.
And after hours, we're looking at Microsoft down now by 4.4%. Also reporting after the bell, Texas Instruments. It initially gained, now shares have moved lower after delivering an upbeat sales forecast for the current quarter, indicating that demand for electronic components does remain strong. This headline from the Bloomberg Professional Service, CN Rail has named Tracy Robinson as president and CEO. Another wild ride on Wall Street today with the Dow, the S&P, NASDAQ all declining. Amanda Gotti is Chief Investment Officer at PNC Asset Management Group. She was our guest right here on Bloomberg Business Week.
We believe strongly that the market is just really struggling to reprice a rapidly evolving macro backdrop, and it's really catalyzed by a complete 180 in terms of tone and behavior and potentially policy shifting coming out of the Fed.
Indeed, a 180 from gains to losses today. At one point, we did have the Dow down 819, ended with a loss of 53. Actually, with a loss of 66. It was the S&P that was down 53 today, down 1.2%. NASDAQ down 2.3%. To be clear, the Dow today down by 0.2%. 10-year yield 1.77%. Spot gold up 0.3, 18.47 the ounce, and West Texas Intermediate crude oil up 2.1%, 85.09 a barrel. I'm Charlie Pellett. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic in our Interactive Brokers studio. We're also streaming on YouTube. So certainly one of the big stories here in the after hours, Charlie touching on it, it will carry over into the Wednesday trade, as will that Fed decision. But we're talking about Microsoft down about 4.5% in the after hours. Keep in mind, Microsoft is 6%, roughly 6% of the S&P 500, about 10% of the NASDAQ 100, and about 5.5% of the Dow. So it will move and impact those averages potentially.
Yeah, it's also moving shares of Amazon in after hours. We are getting some commentary from executives as the earnings call gets underway. Microsoft CFO says that no new Activision comments are coming today. The second quarter Surface Xbox supply was actually better than expected. Those are questions about the supply chain, Carol.
Yep.
Those are answers about the supply chain. And then the company CFO also pointed to a strong second quarter demand for commercial PCs. Hey, I wanted to, just got an email from Dan Ives over at Wedbush Securities with his latest note. He's bullish on most of the companies that he covers. In fact, as of last week, he only had buys or hold ratings on every company that he covers. He has an outperform rating on Microsoft with a 12-month price target of $375 per share. He said that he calls the pullback that we're seeing in the after hours, quote, a modest sell-off, and says that we would be buyers on this modest sell-off as we believe the underlying metrics and implied growth trajectory into the rest of 2022 is strong for Microsoft.
So he sees it as an entry point
to
get in on a name. Our Idina Bass has got a right through too on the Bloomberg terminal, and the headline on it is Microsoft slowing cloud growth, casting shadow on a strong report. So it was a strong report.
Yeah.
Second quarter sales and profit gains. They did post that in the quarter. They did report decelerating revenue for Azure cloud computing services. So there is some concern among some investors that the pace of growth in that division has peaked a bit. I guess sales growth for Azure was 46%. So that was short of some of the rosiest estimates out there. They have come to expect gains of as much as 50% or more per quarter. And that's expectations.
It's expectations.
Right?
You're right. Meeting expectations is not enough, right? They need to raise and beat. It's actually something that Dan Ives echoed. It's in bold in his note. He says the stock's selling off after market as Azure growth came in at 46%. It beat the street at 45%, but was lower than some bullish whisper numbers at 48%.
I'll go back to Gina Martin Adams, a Bloomberg Intelligence. She writes about and watches the equity markets for us here at Bloomberg. And what's interesting is she said, we will have earnings growth. You will see that, but the comps are getting more difficult. You may not see the stronger numbers or their outperformance that we saw, prior to this or the year before. And you need to think about the perspective. And so this is where we need to understand the fundamentals. And maybe this is what we've seen already in the equity markets this year in terms of the correction, a recalibration of maybe the kind of growth we're going to have and the kind of earnings growth we're going to have. And that's a bit of a reset that we're seeing. And we'll find out more from some of the other tech companies that will report tomorrow and into next week.
Yeah, we're expecting Intel results tomorrow. Later in the week, we're also going to hear from Apple in addition to Tesla. So we'll have certainly some questions and hopefully answers around supply chain with those companies. Speaking of demand, Microsoft CFO saying that second quarter cloud demand was actually better than the company expected. So
does that mean their internal expectations were low?
Yeah, I don't know.
I mean, this is where you want more specificity, right? Brent Hill, he's an analyst over at Jefferies. This is in Dina Bass of Bloomberg, her story. The quote from him is, we've kind of hit the highest peak of growth we're going to see in a while. He's talking about Microsoft. You have a theme of decelerating growth and harder comps are coming up. So talking about Microsoft, but probably more generally in the tech space. And so, again, you can't just be gangbusters, right? The economy is going to go through a reset. We're going to see that this year in 2022.
All right. Well, speaking of gangbusters, Carol, we got to go back to what Microsoft has done the last few years because, to put this in the context of the last 3 years, in 2021, Microsoft was higher by 52.4%, 52.5%. In 2020, higher by 42%. In 2019, it was higher by 57.5%.
It's been on a tear.
It's been on an absolute tear.
Right, right. And I think about Satya Nadella, that he has definitely been recreating that company and focusing it differently from his predecessors. There was a great Bloomberg cover story. I got to think about, was it the last year or so, maybe a little bit longer. But
that was longer. That was before I worked here because I read it.
It was a couple years.
It was a couple of years. I remember that story.
But putting his mark on the company and doing it differently.
Yeah.
And investors and the analyst community liking what he was doing.
Okay, so after 3 years of huge growth for Microsoft.
Can you take a breather?
Yeah, I mean, shares down 14.2% this year. Look, not a good start to the year, but putting in the context of the last few years, the company, like you said, has been on a tear.
2022 revenues, adjusted revenues, forecast to be $196 billion. I mean, they still sell a whole lot of stuff. I'm just going to say. So maybe the growth rates slow down, but nonetheless, still doing a lot of business. Anyway, we'll watch that trade certainly into the Wednesday session. In the meantime, let's get another update on world and national news for you. Let's head over to Nancy Lyons. She is in D.C. Hi, Nance.
Thanks, Carol. President Biden is explaining that putting 8,500 troops on alert is aimed at reassuring East European members of NATO that the U.S. is committed to their security.
The president said a Russian move into Ukraine with all the available forces would be the largest invasion since World War II, with enormous consequences for Russia and Europe.
Those forces in high alert are part of a NATO operation, and I've made it clear to President Putin that we have a sacred obligation to our NATO allies. If in fact he continued the buildup and or was to move, we would be reinforcing those troops. I may be moving some of those troops in the nearer term, just because it takes time.
The president said he's prepared to include Putin himself among the targets for potential economic sanctions. In Washington, Irv Chapman, Bloomberg Radio.
The International Monetary Fund is downgrading its forecast for the world economy this year. It says it's because of the spread of the Omicron variant, plus higher energy prices, an uptick in inflation, and financial strains in China. London police are looking into parties held at government offices during the COVID-19 lockdown. British Prime Minister Boris Johnson is battling for his political survival over the revelations and says he's fine with the investigation.
I welcome the Met's decision to conduct its own investigation because I believe this will help to give the public the clarity it needs and help to draw a line under matters.
A spokesman for Johnson says the prime minister does not believe he broke the law. There are reports New Orleans Saints coach Sean Payton intends to retire from coaching. He's 58, 152 wins to 89 losses in 15 seasons with the Saints. Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stanovic here in our interactive broker studio. What's on your agenda here?
I'm just trying to figure out what I want to talk about. We have a couple stories that are among the most read on the Bloomberg terminal. We haven't talked much about crypto today, Carol. And it's interesting because if we look at CRYP Go on the Bloomberg terminal, which is the central database of top cryptocurrencies, Bitcoin is always trading. It's down 0.7% right now, but above that $36,000 line. So it got
down across the board, though, in terms of the different cryptocurrencies that are out there, at least on our monitor, right?
Yeah, exactly. A story on the Bloomberg terminal has to do with a lot of the cryptos out there that have lost a lot of the luster in recent weeks. This by Emily Nicole, talking about how LOL doesn't sit well with users of crypto's next big thing. It was once billed as one of the hottest rising stars in crypto. Solana's repeated run-ins with bots, outages, and frustrated traders during the recent market crash might be about to knock the blockchain network off its pedestal.
Yeah, the protocol suffering its sixth serious outage of more than 8 hours this month over the weekend, which a notice on its website attributed to excessive duplicate transactions, causing a high level of network congestion. Solana Labs co-founder also pointing out to an explanation on Twitter, which cited market volatility as causing downtime as bots rush to earn bounties on leveraged positions eligible for liquidation. Okay, I feel like I'm speaking a foreign language, but having said that, you know, if you're going to put this stuff out there, you better make sure it works.
Yeah, you better make sure it works. And you also have to wonder how people feel about the value of the cryptocurrency if the network that it's on isn't reliable.
Well, and it's just a reminder, we talk about this. What is it? Is it highly speculative investment vehicles?
Are you paying for stuff in
collectibles?
crypto?
I am not yet.
Yeah, most people aren't.
No, are you?
No.
Although, you know, Mayor Adams got his paycheck and then crypto fell.
Yeah, that paycheck worth quite a bit less than when he took that.
I was thinking about that when I saw that follow through.
But worth more than it was yesterday.
All right, we're going to talk to Anne-Marie Slaughter in just a moment right here on Bloomberg Radio. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Lots of tech earnings after the bell, setting us up later this week for Apple, Intel, and Tesla. Microsoft shares down now by almost 5%. Did post second quarter sales and profit gains. It also reported decelerating revenue for Azure cloud computing services, and that's raising concern among some investors that the pace of growth in that division has peaked. Texas Instruments shares initially gained. Right now they are lower, little change, down just about 2.5%. It delivered an upbeat sales forecast for the current quarter, indicating that demand for electronic components does remain strong. It was another wild rail ride on Wall Street today, with the Dow, the S&P, NASDAQ all ending lower. At one point, the Dow was down 819 points, down 2.4%. It ended the session with a loss of 53 points, down today by 0.2%. The Dow actually down 66. It was the S&P that was down 53, a drop there of 1.2%. NASDAQ down 315, a drop there of 2.3%. So to be sure, the Dow down 0.2% today, the S&P down 1.2%, NASDAQ lower by 2.3%. 10-year yield 1.77%. Spot gold up 0.3, $18.47 the ounce. West Texas Intermediate crude up 2.1%, $85.10 for a barrel of West Texas Intermediate crude. Briefly, Bank of America's rewarding almost all of its employees with a pool of $1 billion in restricted stock, further boosting compensation as financial firms compete to attract and retain workers. I'm Charlie Pellet. That is a Bloomberg Business Flash.
So appreciate it, Charlie. Thank you so much for that update. Well, many challenges we know facing our nation, our world. Pick your topic. And many might argue that the U.S. alone is facing an identity crisis when it comes to a lot of things. Diversity, racism, division. It's a lot that we're dealing with. Our next guest, too, has faced some personal struggles that have given her some insight individually and really on a grander scale. So great to have back on Bloomberg Radio Anne-Marie Slaughter, well-known voice when it comes to political science and public policy, former dean at Princeton School of Public and International Affairs. She was director of policy planning for the U.S. State Department during the Obama administration. Today, she is CEO of the think tank New America, Tim, and she's got a new book.
She does. The new book is called Renewal: From Crisis to Transformation in Our Lives, Work, and Politics. Anne-Marie Slaughter, how are you?
I'm great. It's great to talk to you both.
It's great to talk to you as well.
Well, and this book, Anne-Marie, it's interesting, it's personal, it's informative. I feel like it's teaching. I feel like it's also very current. It begins with something you went through personally. Tell us and take us to the point where you write about the worst day in your professional life. What happened?
So New America was going through a crisis in 2017 involving a funder and accusations of giving into pressure to that funder. And I did not do what I was accused of, but I had made some real mistakes. I mean, my organization was getting pummeled in the media, and at that point, almost no matter what you did, the buck stops with you. And that opening scene in the book is the day that I went down to D.C. to face my staff and apologize for putting them in a position where the organization was really taking some hits. And what I describe is, a very frank discussion. We have a very strong-minded group of staff. But a lot of support, but not as much support as I would have wanted. And then a process where I really had to look at my own leadership, but also look at myself the way, others see me or saw me in the institution, and realize that the institution I thought I led was not really the institution that lots of people were experiencing, which I think is not unique to me as an organizational leader.
Hey, Anne-Marie, what was the moment that you realized that you needed to apologize for something, that you had made a mistake, that moment of self-reflection when you realized that, look, for lack of a better term, you were in the wrong?
Yeah. Well, in part, it was realization that sort of just holding your head up high and trying to get through it was not going to work. It was also, though, talking to David Bradley, who was the head of Atlantic Media, or is still, and he was on my board, and I called him, and he said, you have to run toward the criticism. He said, it's as if you're having an argument with your spouse, and it's clear that your spouse is 98% wrong. We've all had those arguments, but maybe 2% right. You need to run toward that 2%, and that is the beginning of a learning journey. And that was his advice, and I realized it was going to be better for me, better for the organization, if in fact I apologized and for the places I knew I had made mistakes and did take it as the beginning of a learning journey.
So when you look at our world and some of the stresses and challenges that we're facing amid a lot of division, you talk about the U.S. facing this identity crisis. How can, from what you learned individually, how can we apply it, maybe all of us, on a grander scale?
Well, I think as a nation, many of us, certainly white Americans and the kind of traditional population of the United States, we have a lot to confront. I would say we need to be running toward the criticism in many ways and not being defensive. I think if we can do that and have a genuine historical reckoning, we then also can go forward with hope. Because the process I described, a process of renewal, it is looking backward and with radical honesty, but that's the predicate for then moving forward, knowing, you faced your worst fears in some ways, but also because you've created trust and honesty that allows you then to imagine positive things again together.
Do we have the self-awareness as a nation to do that? I just think that, there are a lot of Americans out there who are using this revisionist history, even elected officials who have this revisionist history of what happened on January 6th. It doesn't seem like we have the self-awareness for a lot of us to look inside like that.
Well, I think at the national level and in Washington, we don't. I think at the local level, and local up to county and then state, much more so. I mean, I grew up in Charlottesville, Virginia. Charlottesville obviously was the site of that horrible, really, political extremist, violent white supremacy riot in 2018. But even without that, Charlottesville's gone through a lot of reckoning. I mean, just facing who Thomas Jefferson really was. Mm-hmm. And there are a lot of people there who the kind of people I grew up with who I would have said, no, they're not going to be able to take in this fuller history. But in the end, the sense of, the value of the country, the value of the values that the country was founded on, Jefferson's values himself, even when he didn't live up to them, there's been much more change than I think we actually see reflected in the national media.
Just got about 25 seconds. Do you have hope?
I do have hope. I have hope because I believe that the diversity of this country is our greatest strength, and that in the end, the extremes do not actually represent the mainstream of the country. It's going to take a lot of work, but I do have hope.
It does feel like a lot of work. We scratched the surface. Come back. I'd love to continue the conversation. I know both Tim and I would like to. And Anne-Marie, good luck with the book. Anne-Marie Slaughter, her new book out is Renewal from Crisis to Transformation in Our Lives, Work, and Politics. She is the CEO of the think tank New America. They focus on the challenges caused by technological and social change. Great to check in with her.
Yeah, really nice to hear
from her. Feels very timely, right?
It does. I'm looking at shares of Microsoft in the after hours, Carol, because this is going to be a story tomorrow, down more than 4.7%.
QQQ also having a tough time in the after hours. All right, for Tim Stanovic and the whole Business Week team, have a safe evening, everyone.